Just a reminder as we get started that everything I share with you today is for your information and education only. Nothing we talk about here should be considered a specific recommendation to buy or sell any particular investment. And of course, you know that you are 100% responsible for your own investment decisions. Big Trends and its staff are not responsible for any trades you choose to make. And not all Big Trends products and services are appropriate for all traders and investors. At Big Trends, we do not provide any personalized financial advice to any individual. What we do instead is we take our research and we send it out through email recommendations to buy and sell for our whole stock doublers group, which is what I'm going to talk about today, is this doubling concept and how you can put it to work in your portfolio. So the key points I want you to take away from my presentation today is why you should be considering stocks now. You know, I got started in trading after graduating from Duke University in 1989. I got started in 1990, so I've been at this more than 30 years and really got interested in options right away because of the growth potential of options even more than stocks. But now I've come full circle back to stocks as well because there's a lot of good reasons why you should be considering a more active stock investing approach on at least part of your portfolio. So we're going to talk about my higher growth strategy. I call it stock doublers, really focused on stocks that can move quickly. It's also about making your trading and investing fit your schedule, you know, not having to sit in front of a screen all day. The way we send out our alerts is we send them out at 6 p.m. Wall Street time, 2 hours after the market closes on what you should do for the next day whenever we have a signal to get in or get out. Most of today's presentation, once you understand the core concepts I'm going to share with you, is about showing you numerous case studies. What I've learned in trading and in life is you want to model success. You want to model people who are doing well, strategies that are doing well, and that's what we're about here at Big Trends. Now, the reason I keep an older slide up here is I had shared with my subscribers an update as of December 16th of 2020, about 3 months ago. And the portfolio had grown over about almost 4 years. Had grown from $10,000 to $53,000. This is assuming no commissions, which of course is one of the great reasons why you should be active stock investing more and more, because you don't pay commissions anymore on your stock trades. If you are, you need to switch brokers to one that won't charge you anything, because there's a lot of them out there that don't charge a single penny to do a stock purchase now. But what was powerful about this is 10,000 to 53,000. Again, past performance doesn't guarantee future results. The future can be better or worse than what it's been in the past. But look at this, in just 2 months, from 12/16 of 2020 to 2/16 of 2021, we grew the portfolio by more than double again. That 53,000 went to 118,000 from the original starting point back in early 2017 at 10,000. So more than a 10 bagger, basically about an 11 bagger and change over that just over 4 years of data. Now, again, you know, we want to make sure that you know what you're doing when you become a stock doubler subscriber, so that every trade you do involves risk. And of course, the past doesn't guarantee the future. But you know, we think we're getting better and better all the time in how you can focus on this stock strategy. Why should you be considering trading more individual stocks now? And these stocks are the ones we trade in stock doublers. We buy them for less than $50 a share, so you can get a lot of bang for your buck, especially on the lower dollar, $1 to $3 and $1 to $4 type of stocks, more and more in our portfolio. But of course, the first reason why, commissions, now nothing to get into stocks. And so you get to keep what you make. So now you just need to have a good strategy. You're not so worried about the broker taking away a chunk of your profits, which used to be a bigger concern a long time ago, but not any more of a concern now. The index, this is number two reason. The index, everybody talks about the S&P 500 index or the Dow or whatever other index you like to look at. It's no longer the smart way to get your stock market exposure compared to the ability, if you have the ability or have the right help to pick the right stocks, you can get such a big edge against the index. Because think about what happened since the pandemic kicked off. We're right about that 1 year anniversary, just past it, when the pandemic was really kicking off, and especially from how it was affecting the stock market last March. And of course, you know, if you think about what happened after that, is that we basically had this breaking up of the index between the reopening sectors, like you know, of course, airlines, hotels, restaurants, some retail, those that got shut down by the pandemic versus those that benefited actually from the pandemic, like the stay-at-home sectors, I call it, the technology sector, which you see is starting to lag here recently, as money's flowing back into like energy and retail and even banks, and away from technology here recently. We've had a rotation the other direction, but those tech stocks really benefited last year from the pandemic and the stay-at-home environment, the Zoom videos of the world, and all kinds of others. So it's about picking the right stocks at the right time. The third key point about why stocks are so powerful is that you can focus on them in your retirement accounts. So then if you got a traditional IRA, individual retirement account as it's called, those traditional monies that you put aside that you can deduct on your taxes don't get taxed until you take the money out, hopefully many years later. Okay, the idea being that you want to keep that money in your retirement account and let it grow, let it keep compounding. So when we can show you the power of this doubling concept, and then doubling on top of a double is our ultimate target on these stock investments. So if you think about that, that's making 4 times your original investment. So if you put $1,000 in, potentially by the time it grows to 4 times that, you could be cashing out of the rest of your position. It's really ideal for a position trading type of a strategy. Now, the origins of this concept for me that I call stock doublers is many years back, and basically I've been looking at this for a long time, but basically saw that I had a lady come up to me at a live seminar I was doing, and I was showing about a stock called Taser, where she said I never would have traded that because she said it was too far above its moving average. You know about moving averages, just tracking a trend line of basically past prices, whether you look at the last 10 days average, the last 20, 50, 100, 200, or more. And so the point being that, that was her belief. And so I remind you that everything you're trading and investing in is based on your perception of the quote value and the potential viability of the stock in the short and longer term. And our perceptions are often biased. They get biased by what we hear, what we read, what we believe, rather than what we see on the chart. So everything that I teach is keyed on technical analysis. So this stock Taser, it actually has changed symbols a couple of times now. Axon, they finally got it to where if you looked it up today, you could go find it at AXON. Okay, so that's the symbol now. But it was, Taser, people, it kind of got a bad name for people getting tasered, and getting shocked by this taser device, which was such a huge thing. This was back in the earlier 2000s. And the point of this whole chart here is that I've got a lot of moving averages here. When you become a stock doubler subscriber, I give you all the settings and rules. But I'm going to teach you about a concept here, which is called the percent above the moving average. So it's the percent greater than a certain moving average, okay? Now, what we have here is that on this particular chart, this blue line is the percent above a moving average, and what I want to see is the green line is 100% above the moving average. So once it crosses above that moving average and it keeps going up, you know what that tells me? It tells me that this stock wants to keep going up. So at just around $1 on this chart as of the start of July, this former Taser, now AXON chart, when you go back and look at it, that buck, look at where it went. It went to $30, a 30 bagger. Now we don't shoot for that much, even though it'd be nice to have those. Those are relatively infrequent, but the doublers, triplers, quadruplers are much more frequent. So if we take it from $1 to $4, we would have cashed out of that trade and be happy to take that money and run to the next opportunity. Once it comes out of that zone here where it breaks this area here and breaks down, we're getting an exit signal in there. In this example, is back around 13 or $14. You see it trying to go above that threshold and failing here, so that would not be a new signal because it didn't get going again. So this basically weeds out a lot of the noise to focus you on the best of the best trends. And so what I did is I tested what this lady's belief was. Is this bad to when they're a lot above a moving average? And actually, I noticed that they're very powerfully good when it sets a certain pattern against a set moving average. What you look for is that you want to see your best stocks have what I call the launch phase, where they're truly taking off. You're never going to buy these at the bottom and get over that desire to buy stuff at the exact low. It's not a good strategy because you end up bottom fishing and buying a bunch of dogs waiting for something to finally come back. I want to actually see that the institutions are powering these stocks into what I call orbit. Once they get into that orbit above that 100% line, they confirm that they're continuing to go higher, they will coast higher. Kind of like if you think of a space shuttle or a rocket that launches into orbit, and then it loses those boosters, and then it keeps cruising because of momentum. It's got that powerful momentum, but it had to have that first thrust takeoff phase, right? And then if they come out of orbit, like a rocket coming out of orbit, they can fall quickly back to Earth. We don't want that. So we'll talk about a bunch of examples here. If I turn back the clock and look at, say, Amazon, which we all know Amazon has turned into just the behemoth giant of a company, but it was kind of like how Tesla's been more recently. Amazon was back at the end of the 90s. It was considered a very expensive stock and very questionable as an investment. You can see that right in this area, it was breaking that area, and then it was confirming that it was continuing to launch. So I look for that follow-through close above that initial move out into that orbit phase, that over that 100% green threshold line there. Anything in between, by the way, you say, can I trade anything in between? No, you can't on this system. You say, stay far away from all of that chop and noise. Just a little bit above the moving average is not sufficient. Okay, so you see in this case from about the mid 30s, Amazon would double at about 70 here, and you'd be taking half of your position out at 100% gains. You take half of your position at a double. What does that do for you psychologically? You get your original risk capital back into your pocket. So whether it keeps going or not, you're basically saying, okay, I've got my risk capital back. This is what we call the proverbial free trade. So once you have a free trade in this situation, you'd say, okay, now you know that you can focus yourself on not worrying about it. And what that does is it frees you up to let it keep running, follow the rules. If it does violate, in this case, you can see it's going to violate in here when it breaks this, comes back out of this orbit phase here, which you see ends up being right near that short-term low. But you still made money on that trade. If you bought it at 35, you sold half at a 100% gain. The other half you're selling at around the 50% gain. You're making about 70% on this trade overall. You're happy to make 70% over what, a couple of months. So we saw the double happen there in just over a month, maybe 5 or 6 weeks. So that's what we're about, is finding those next ones. And then, of course, it launches again into the start of 99. So the point of this is that you can hop back on the wagon. Now, I mentioned we look for these to happen over the coming weeks, but sometimes that can happen over a period of days. The electric vehicle craze has basically been a tremendous area to make money. And you see a name I'd never heard of when my scans picked it up this past November. We're getting the crossover point right after the presidential election on this stock, electromechanical vehicles. It's obviously a foreign stock tied to this EV trend. And you see there's the key high. It's got to break above about $5. Notice that it closes above it the very next day. It goes to about 7.5, closes at about 6.5, and we say we want to get into this. We end up buying it that next morning at like 6.25. Okay, so we're in there just under 6.5, and we're saying, okay, so if you were in at 6.5, your double target would be 13. Well, I think we needed like 12.50. You see, we're getting it just 4 days later as it goes to this launch phase. Now, this is an example of another one that ended up then coming back down, and basically the second half was exited closer to where we entered. So we only made a little over 50% on the total trade, even though we doubled in 4 days. But the beauty of that is that once you get that free trade, you give it a chance to keep running. You'll see a lot of them that do keep running to higher levels. Now, sometimes we're even fortunate enough to cash out within a day or two. So here's a stock, SENS, that basically had that breakout back here. You can see right here at January 14th this year, that first breakout, we need to see it close above that level. You see it gaps up, and it closes above it here at like $1.65, and so we're able to enter right off of this next morning's open here at about $1.60. Okay, so what do you need for a double? $1.60 times 2. That's really easy to calculate your targets this way too. You say, well, $1.60 times 2 is like 320. It opens at 330 right here the next trading morning. So you see, I had a great first day for us, got up to about 3. And you don't want to, here's another thing, folks, you want to make sure of. If you've gotten used to seeing your profits slip away, so then you've conditioned yourself to want to take small profits so they can't turn into losses, That is not the secret to trading and investing success. The secret to success is to control your losses, but let your winners run, especially with a powerful method like this. You cannot take your winners too quickly. You've got to target a double for that first piece and then give it a chance for even bigger gains from there. So you can see we're cashing out there, and I think we still own the second half of this one, just sitting on it. It's been just kind of chopping around, waiting for that next target. By the way, what's our next target? If we needed 320 for a double, our next target is a double on a double, which is 640 from our original investment around $1.60. That's a four bagger. Say, and I've even had subscribers say, "Isn't that greedy to expect that much of a move?" And I'm saying, look, these can move so fast that you want to give yourself a chance to let them get going. Here's a great example of one that had already started to move, and we were buying it at 21 bucks or so last November, when you can see the stock starting to break out right here, and you see as that broke out on Aptivo Pharmaceuticals. Again, these are names that I haven't necessarily been following for a long time. They pop up on my scan when it closes above that $20 level, or about actually 15 to $16 level, closes at 21. We're there buying right on the open the next day. So we sent an alert that night to buy the next morning's open, and we're in there at about 21 bucks. I think it was 21.10 to be official. Okay, so what do we need? We need $42.20. That was on a Friday morning. We got in on November 6th, right around the coming off the election there, and you can see the next morning it opens at $50. We made more than a double. We made 142% in basically, the next trading day, that Monday morning, because the weekends, of course, nothing trades. At that point, we're sitting there waiting for, can it keep going to our ultimate target, which would be up around 84. It didn't. It came back off. We, I think, sold the next piece in the 30s. So the beauty of that is, okay, we still averaged close to a double on the whole position because of that. So the goal is find that momentum and catch it. Now, I've got a bunch of numbers on here. Don't panic when I show you these numbers, but I don't know if any of you play golf. Anybody play golf here? Give me a yes or no in the chat box that you're paying attention here. There's 18 holes in a golf game, right? I've been so busy with the markets, I haven't played much golf in a while, but eager to pick it back up. But bottom line is that I love the game. It's an okay. So we've got some golfers. I'm glad to see it. Well, a buddy of mine likes to play for like 10 bucks a hole. And I said, well, what if we played for a penny a hole and we doubled it every hole? And he's like, no, I don't want to do that. That's small change. Well, you know what? Look at how powerful the doubling concept is as we get to the first six holes. On the sixth hole, you'd be playing for 32 cents. If you doubled from a penny on the first hole, 2 pennies, 4, etc. Okay, by the 12th hole here, which is this next second line here of six instances, you'd be at $20.48. Guess what you're at by the 18th hole? On the 18th hole, you're up here to $1,310.72 that you'd be playing for on the 18th hole. When I showed my buddy that, he was kind of shocked. Now, that's for a penny starting point. Imagine if you started $1 and double it 18 times. That last one would be $131,000 on the 18th doubling. Okay, so the point of this is that's why Warren Buffett calls compounding the eighth wonder of the world. The power of compounding is truly your best friend in investing, and especially now when you can use stocks to get these doubles and more, you're truly focused on this. So whether you play golf or not, I see, Destin, you're not a golfer. That's okay. You would like to double your money multiple times, wouldn't you? Of course. So it's about getting that bigger bang for your buck in your portfolio, and these stocks are popping for us all the time. Now, a great case in point here, this is one we just cashed out of back here 2 months ago in the middle of January, was Plug Power. They just came out with bad news. We sold our final position in the about 73 and change level. I think it was like 73.80, right near the top, it turned out. They just announced that they're restating financials, and stock was down into the mid-30s yesterday. So we were able to cash out of this before it cratered back down. But you see, where are we getting that buy signal? Back here, right around the presidential election, early November, stocks trading here at 18 and a half bucks, roughly, you can see. So obviously, at about 18 and a half, you need about 37 to get your first double, which you can see this one happened right before Christmas. So about 6 weeks later, we're taking a double on Plug. These are just on the stocks. And then you see, as you take that double, you say, oh, I should have sold it all because it's dropping down, right? Wrong, because basically you see then it rockets from the 30s up to the 70s. So we're saying thank you very much, Mr. Market. We're taking that 300% profit, and it took us 9 weeks to get a double on a double. Okay, so the beauty of this is that you find these, and a lot of people know that name Plug, but you might not know this name, Orbital Energy Group, OEG. I didn't know this name when I got my signal. My signal was setting up the day before Christmas, and you can see then we were getting our confirmation happening right at New Year's Eve, December 31st. Right as we kicked off 2021, we're saying get into Orbital Energy Group. Again, these are already closed, so don't get into any of these now. These are past examples. But the point being that we were telling our subscribers and stock doublers with an updated email that night. You could be out at New Year's Eve celebrating and saying, you know what you're getting into here. You're getting into Orbital Energy, $2.18. We got our double. You can see here counted out in about 6 days. Because that's 6 days into the trade, we got 100% gain, right? Because 218 went to 436. We're cashing it out somewhere in here. Then it pauses for the next week and a half. But you can see in 16 days, what do we need for our double on a double? We needed it to go to in the neighborhood of about $8.72. Well, let's look at where it goes. It goes to $10 on the 16th day. So you say, how is that possible? One of my trading mentors when I was getting started in the game, like I mentioned, I got started trading stocks and options in 1990. And one of my blessings was to have great mentors. And one of my mentors told me, how does a stock go from 1 to 100? What's it got to do first? It's got to go from 1 to 10 first. It's got to prove it to you that it can really move a lot. Those are the stocks you want to be on, because let's face it, you and I as individuals don't move the market like a group of institutions do. Even all the hype about GameStop and how the individuals are taking over the institutions, I believe that's a great story, but the bottom line is that the institutions were a big part of the GameStop move, okay? So you have to realize that the institutions are the ones that are going to drive these stocks to new heights or crashing back down. So you want to be on during these patterns where you're getting this type of mammoth growth opportunity, even though there's going to be losses along the way too, and we'll talk about how we manage that. So like when we got into Nano Dimension, NNDM, back here in November, our signal came and confirmed for us right in the neighborhood here about $4.41. And here's a great example about when we get in, we're a bit above that 100% line. And then it actually shot back down those next couple of days, and it dropped about $1 on us. We were down about 20% on that stock in about 2 days. And this is what I call the retest day right here. When it pops back under that 100% threshold line, if we had a close after that, below that key day's low there in the middle of November, we would have had to get out right in this zone here. That would have been an X for an exit, but it didn't happen. So the point being that had reset at what our stop was, and we told our subscribers, look, if it closes under that low fours level, we're going to have to hop out of that thing. And you can see then it rockets on up as we get out in the first target up there in the 880 range, 884 I think was our exit. We're cashing it out right there right before Christmas. And then what do we need? 880 times 2, we need to go up to about 17 and change, and we're cashing it out right up here in that area for a 300% profit in just 10 weeks. So this is incredibly speedy in how fast you can make money with these. And when you really factor in, hey, a lot of people would be happy with a 20% gain in a year, in 52 weeks. And we're saying 300% gain in 10 weeks. You can see that if you're behind on your retirement, if you're behind on where you think you should be in your stage of life in terms of your investing portfolio, this can rapidly accelerate you playing catch up. And we get a lot of our subscribers coming in and saying this is exactly what I've been waiting for this type of opportunity to see these names. And last year, I mentioned the electronic vehicle plays, which were really hot at the second half of last year and the start of this year. The first half of last year was all about vaccine names. When the pandemic hit, a lot of our portfolio was carried by the big gains in names like Novavax. So Novavax gave a signal. The first signal it gave back here for our stock doublers was at the start of March. And this one actually got stopped out for a loss of about 25%. Okay, so you're down 25%. Okay, that's following the rules. Give or take, you're down 25% on a stock. That's not fun to lose 25%, right? But one of the things that we do to minimize that risk is we can carry up to 25 positions in our portfolio for stock doublers, meaning that if you're investing percentage-wise as a percent of whatever amount you're investing, we tell people don't put more than 4% of your portfolio into any one name. So if you put 4% of your portfolio into Novavax and then you lose 25% on that, that is actually only 1% of your total portfolio that you've lost. That's very acceptable risk. Obviously, on the next example here, where we get back on the horse here from our setup happening late March, the buy officially happens for us April 6th. That's from just under 20, and then it goes up to 80, and you say, thanks very much. We take a quadruple. That's a 300% gain. First half sold at 100% gain plus, and so we averaged about plus 200% over that whole trade. So think about this with me. If you lost 25% and then you made an average of 200%, what's your reward to risk on that example? If you could do that 50% of the time, lose 25, then make 200, how much more are you making compared to what you're losing? Anybody can do some quick math for me? Think about it this way. It's like, think of quarters versus a couple dollars. You know, it's like 8 quarters makes up that $2, 2.00. So that's 8-to-1 reward for your risk. Anything over 2-to-1 for me is acceptable. And when I can do 8-to-1, I'm pounding the table to do that as many times and as many signals as I get. So you have to start to acclimate yourself to that. And obviously, even if you put 4% in and you made a triple, that'd be like making like 12 percentage points on your portfolio in just one trade, which a lot of people would be happy with for a year on a portfolio. So names like Sorrento Therapeutics, this one only doubled. You can see that we're getting our signals across here just under $10, and then it went up from 9 to 18 here in a matter of about 6 weeks. So, and again, the exit on the second piece would come when it violates that level, and then we're out of the trade in here as it's back down to about where we got in. So we average about a 50% gain. That happens sometimes. A name like Vaxart signaled right here. Again, this was June. Everybody's trying to figure out who's going to be the big leader. There's our confirmation signal. So we're buying the next open here around $4, cashing it out here more than a double when it gaps up here to about 11, and then our final target getting hit as it hits up here into about the 16 area and saying thank you very much. 100% plus, actually more like 200% on that first piece, and then 300% on the rest, and then we're done with the trade. And that was in a month or less. Inovio, another one that broke out right as the pandemic started early March. You can see this one was just breaking out here, and we confirmed the next day. So there's a confirmation. So we said buy that next morning's open here, and this thing doubled in just 2 days. So you're in from about $10 to up to $20, and then saying there's 100% gain in 2 days. Okay. And so at that point, then you go, okay, what do I do now? You hold as it pops all the way back down to at or even a slightly under where we bought it. There's our first retest. There's our second retest. These retest points, there's a third one coming here about a month and a half later. These key lows, you see how good they are at defining the key support in that grinding uptrend to where Inovio eventually hit up to from 8 to 32 for that four bagger. But that took a little bit more time for that final target versus just the 2 days for the double. I'm curious, what type of trader would you say you are? If you put a number on yourself, 1 through 5, 1 for the quick 1 or 2 day trade type of trader, type the number 1 in the chat box. 2 for the swing trader, 3 to 5 days, type the number 2. 3 for a position trader, 1 to 4 weeks, type the number 3. The one we're doing here would be definitely more of an active investor, 1 to 12 months. Even though some of these might happen in days, I don't want you to have that expectation. I want you to be realistic. Our average doubler is about somewhere up to about 2 months that it might take for a typical doubler, but we can do a lot of these in days or weeks. So we've got a nice mix here of folks, a lot of you in the position to swing trader camps, and realizing that you can apply what you're learning here to a lot of different time frames. Even a name like Overstock.com, which broke out for us last June, this was a little higher dollar name. It was into nearing the 30 level here. So you see, as we're breaking out here in the high 20s, you know, think about it. If you got in at 30, what do you need to get a 4-bagger? You need 120. You say, is that going to really happen on Overstock.com? Believe it or not, it happened a matter of a couple months later. Phenomenal move as people were stuck at home. Overstock is an online retailer. And by the way, we're in that trade, and guess what? At first, we get tested. There's our retest. This low had to hold. It did. So that's what I love about this system, is that it gives you a key, not just breakout level, but a key retracement point to define the risk. Say if it doesn't hold, get the heck out, move on to the next opportunity. If it does hold, don't get panicked out by a brief little dip against you. We've had loads of names that have been really good, but lately more of our focus has gone to the very low dollar stocks, because we get a lot more bang for our buck buying a $1 or $2 stock. It's a lot easier to take a $1 stock to $4 than it is to take a $100 stock to $400. And so that's why we won't buy any stock over $50 in this portfolio. So you could actually, even holding up to 25 positions, you could actually get started in this portfolio with as little as $1,250. If you say, I'm going to get just at least a share of every one that's recommended, even if it was at $50 on every one of those 25 names. You can start with a very small amount of dough, and you can do this on a lot of the popular platforms out there, and start with a really small amount of cash to get you going. You see Trillium, a name I didn't know at the time when this signaled at $1. You see, then it quickly went from $1 to $4 on just this first move, right? And look, it's getting like 600% or 700% over that long-term moving average really quickly there in a matter of weeks. And we're done with the trade. Now, theoretically, you see, there's your retest point. We're already out of the trade at our double and our four-bagger, but you could have gotten back in there in that pullback right off the pandemic bottom and seen it go back from $2 back to $8, right? So the beauty of this is that it gives you reentry points in spots where you can get back on the wagon there. The big thing for me is that you've got to be proactive in your investing approach. You can't just be reactive to what other people or other news sites are telling you is working well or is a good stock. You've got to look for the pattern. And our big thing at Big Trends is teaching you about how you can control your time in the markets. I don't want you hyper-focused on these all day, every day. I want you to look at them on a day-to-day basis. Everything I'm showing you here is a daily chart. I want you to be able to enjoy your life and not be stuck in front of a screen. And say, look, it's about not being reactive. Let's focus on being proactive with this approach that says, you know what, only take the best of the best. We're talking about the top fraction of 1% of stocks on the NYSE and the NASDAQ. We're going to only consider literally a handful of stocks, a couple of handfuls at a time, and get you into the best few names at a time. So we just even recently just made a couple of brand new buys that you could get into as a brand new subscriber right now and start participating in this. And get rid of the guesswork. Get rid of the wondering if you should buy quote quality blue chip, and say, look, focus on the higher growth names. You'll get more bang for your buck, at least for the more growth oriented part of your portfolio. Vivo Power, a name I hadn't heard of before, VVPR, and then it confirmed the very next day. That's usually a pattern we want to see, is that the institutions are starting to pile on right away. Came real close to a retest right here at that low near $3. So first, we're slightly down on it after just 3 days in the trade. That doesn't worry me. And then you can see as it goes from that $3 range up to a high of $14. 3.5 turns into 7, 7 turns into 14, double on a double. We say thank you very much and take the money and run to the next opportunity out at 300% in just under a month. So a lot of you heard of Workhorse as an example. This is a trade we called out last June on our system. And so what it looks like is that we would, at 6 p.m., this is 2 hours after Wall Street closes, we send out our trade alerts to get in or get out based on the research that we do right after the close. I run a lot of scans, a lot of data through thousands of different stocks to get the best of the best. So we were saying buy Workhorse the next morning at the market. So we get in typically right off of the market open that next morning. So we said June 23rd, get in on WKHS. So why do we say that? Well, because there's the chart. It was actually absolutely blasting. You can see on the 22nd, it was setting up here. Then it was confirming the next day. We're saying, okay, there's our confirmation. It closed above that high. So we're in there buying the next morning on the 24th, right in here into the $10 range or slightly below that. You can see now $10 goes to $20 in a matter of a week. We've made our double target on the first half of our position. So as you can see, it's popping very dramatically. And then it gets stuck after we sell the first half out at 100%. It gets stuck there for about a month and a half doing not much of anything. But you know what? We said, okay, we were actually in below 10. We're actually in the 7.5 range, I think, because it actually our final target to get our four bagger was 28.84. So when you go back and look at that chart, after being stuck between 16 and 20, then it pops up to 30 here by mid-September. So this trade took from late June to mid-September to make its 300% gain. So it's just really powerful. You see what, so we give you not just the entry instruction, we always tell you exactly what we need to do when it's time to get out. We'll say, okay, we worked this good till canceled order to get a 300% gain. We got it there in mid-September. Pacific Ethanol, another one that's breaking out last summer. You can see, so I've got loads of examples, new and old. We've made some nice gainers, doubles and quadruples here in 2021, as I showed you earlier, like Plug Power, Sun Power, and many more. But you can see that one's off to a very quick start, gets that first target hit from about 2 to 4, and then ends up going up here to 8 and say, thank you very much for cashing out at 300%. Literally just less than 2 months into that trade. So that's a very kind of classic. Now, one thing you got to be careful about, here's what not to do. If you see one where you're like, oh, well, definitely this would be on Headley's system here when Kodak breaks out here and then it confirms right here, right? So that was a confirmation. But look at how far extended it is. It's over 1,000% above that moving average. I've got some rules that I teach my subscribers about. Don't buy it if it's too extended. If you buy it when it's too extended and buy right here off the next bar's open and the $42 on Kodak, it gets stopped out at $8, you're down 80%. We stayed away from this trade. We did not make a trade here on Kodak. Now, we did buy Kodak a couple months later. Remember, Kodak popped initially on that hope of Defense Powers Act turning into a COVID play. But you see, we bought it about 12 here. It retested about 10, and we got knocked out here for about a 16 or 17% loss. So we did lose on that trade. Okay, so we're not going to be right every time. That's why I like to show you that chart. But we avoided the big loss because we didn't buy it too extended. So that's really important. And so then you can get back on names like Nautilus that gave the breakout, gave a nice follow through right away. Of course, the stay-at-home workout trend that's really been a powerful one. And notice it never gave a retest. So you don't want to miss out on these and wait for a retest that never comes. We bought it in the 5 range and then sold it in the 20 range. Said thank you very much for that 300% gain. After that one took about 6 months, but very happy to make a double and then a 300% gain in 6 months. So some of the keys to riding stock doublers for trading success here, or you've got to focus yourself on the catalyst. The catalyst here is it's got to go above that 100% line, and then it's got to keep going up. It's got to get a daily close beyond that first key high when it starts to break out. That tells you you're really in that launch phase. On trade instructions, we'll only give you new trades or new exits if we get a violation at 6 p.m. Wall Street time any trading day for the next trading morning to get in or get out. We get those exits if we start crossing under that 100% line and then violating that, closing below that key low. That's considered a trend end, an exit point. Don't trade any old breakout. We want to leave the small fish, the small trends to everybody else. We're going to focus on the truly big trends with those power moves. We also give you weekly video trading updates. We update all open positions. You know exactly what you need to do on every position. So like I said, if you came in late, I show this old example through December 16th, because just to remind you, we had grown over about 4 years a $10,000 portfolio up to $53,000 with our stock doublers, and said, okay, look, this is something where you're taking no more than 4% into each position. You are using the power of compounding over time to keep growing your portfolio. And then I show, okay, even just 2 months later, we took that 53,000 to 118,000, more than a double through that incredible run that the markets had. And we said at that point, we were like, okay, the markets have had a little retracing. We're still basically doing just fine here and continue to grow loads of stock doublers opportunities here. So what I've got for you is a great way to get you started here. I want to show you this real quick, and I'll post it here in our chat box here to everybody. It's a members page that we set up. It's not a WW page, so make a note of that. It's members.bigtrends.com/doublers. And on this special, normally you would get typically on a year on my website would cost you $2,000. So 2 years would cost you $4,000, $39.97. But I'm actually doing it at a special price of just $997, not for a year, but actually for 2 years. I call this a BOGO special. Buy 1 year at the discount, just $997. I'll add an extra 12 months to your subscription, make it at 2 years for less than the price of one. BOGO, buy one, get the second on me special on that longer term subscription. Also, as an extra bonus, in addition to the extra savings you're getting, I'm going to add for the first 10 BOGO buyers my multi-hour stock trading boot camp. That's another $500 value added to this BOGO special when you go to that special link here at members.bigtrends.com/doublers. If that's out of your price range, even though that's by far the best value, you can try 3 months and save half off of my normal 3-month price. So 3 months access would be $297. So this will get you about 25 trades over the next 90 days to try it out, see the power of this, start to build your portfolio up with the best candidates for risk versus reward, big growth versus very manageable risk along the way. And so the beauty of this is that this really helps you to learn while you earn, because I always give you weekly video updates every Monday after the market closes. You'll have those waiting for you in your member site access, and you'll be able to truly be on the next big winners. Now let me show you something too. I want to pop up this page here real quick. If I go to that page, which is members.bigtrends.com, I want to show you kind of how this works. At that page, you'll see that you'll get these choices. And so when you pop it up here real quick, let me do that. Here it is. You go to that page and you'll see you have a choice. You have to click one of the check boxes here. $297 for 3 months. Obviously, when you're getting 24 months on the other offer, that's like almost a $2,400 total investment you make every quarter for 8 quarters. $2,400, you're only paying $997 for it, even at the best quarterly pricing I've got. So you're saving huge with that, and you're also getting that extra bonus I just threw in for you to add the for the first 10 buyers that stock trading boot camps. You get. I know I can only get so much across in 45 minutes. We've got more great speakers coming up here in just a few minutes, but I want to show you one thing here. Is when you hit that green checkout button, all the fields in bold you need to get, including your email twice here, okay? So get your email in twice. We take all the major forms of payment, including PayPal here. You can click the PayPal button. We get a lot of people that love to use that. You can say, as you saw with me on this webinar here, but I want to point something out in the customer note field. If you like to get text alerts, if we have a new trade at 6 p.m. any day, you can say, text me the alerts to whatever your preferred cell phone is, and you can type in, we ask that you type in what your provider is, AT&T, Verizon, whatever you got, T-Mobile, you name it, and we'll get you in on the text alerts. There's no additional charge from us. You just need to have unlimited text capabilities for the various texts that will come in to tell you when to get in, when to get out after the market closes. And we also sometimes will send them out before the market opens as a reiteration. So you can also, you'll want to review our terms and conditions. We're really clear. Like I said, I'm on now my 22nd year here since I launched Big Trends back in 1999. So we've been doing this a long time at Big Trends, and everything's secure, of course, on your payment. This is not an auto renew; it's a one-time investment, whether you buy the quarter or the 2 years access on this BOGO special, being by far the best value for a one-time investment, just $997. So you're going to get truly 30-year veteran of the stock and options markets, and of course, I'm going to guide you every step of the way on what you need to do, when to get in and when to get out. So there's no questions asked. But if you have questions, at the bottom of the page, you see we've got a very memorable 800 toll-free number, 1-800-BIG-TRENDS. Or you can, and we give you email access too. Anytime you got questions, my client care team standing by to help you with any questions. If you have questions getting your order placed, let us know. Now, I'm done with my time today, so I want to hand it back over to Anna so she can get ready for our next presenter. But if you've got questions for me, just go to that link or call us at 800 Big Trends if you have any questions. I wish you great stock market success here. And with this 2-year special, we're covering you for the next 24 months to get fantastic value and bang for your buck and get on the next doublers and quadruplers with this stock doublers special offer.
So today I want to talk about understanding market language and how to spot the high probability trades with analysis. Before I go anywhere, I am Marina, the trader chick, and that's me, and that's one of my favorite little people. And as I mentioned before, I am an expat living in Guatemala. I live in Antigua, Guatemala. I don't know if any of you guys have ever been here to Guatemala, Antigua. It's magical. I've been here for 12 years. I've never lived anywhere this long in my life. So it's a super special place. Great, great, great place to raise your kids. And this is my family. I am married to a Guatemalan, but I love it here more than him. That is the conflict in our family. He wants out, I want in. I am trilingual. I was originally born in the Soviet Union, so I speak Russian fluently. It is my mother tongue, but it is not really my native tongue because I pretty much was raised in the US since I was really small. So English is my main language. However, I have now been living in Central America. We lived in Costa Rica before moving to Guatemala for almost 20 years. So I am fluent in Spanish. And the only main reason I bring this up is because it's about languages. And one thing I recognized after struggling with my trading for quite some time is that the market speaks to us. It has its own language. And the only reason I think was able to fully understand that is I learned Spanish in my later years. I was in my late 20s. And when I learned Spanish, as anybody knows who has learned another language in their later years, not as a child it comes like in seconds, almost instinctively, right? I learned English within literally 3 months. I was fluent, right? But obviously not with Spanish. It took me quite some time. And one thing it's like a process, right? Everything somebody was telling me, I had to take everything in, translate every single word. It was this massive process. The same exact thing went for when I was trying to say something. I was first saying it to myself in English, translating, and then getting it out. So it took a long time. I had really patient people helping me. But then after you've committed, after you've really, really practiced and, really given yourself to really wanting to learn it, I woke up one day and I just started to speak Spanish. It was just there. I just spoke Spanish. I'm not 100% fluent. I could easily get around. I could now hang out in groups of people and talk Spanish, have fun. But it happened overnight, kind of a thing, when you just wake up, but it didn't happen overnight either. It was a process. And that's one thing I realized when I failed miserably many times with the market simply because I wasn't looking at it as a language. I was trying to follow other people's strategies and not really understanding what it was saying. And then one day, after really sitting for months and months practicing and learning, I realized that there is a language and the market actually really speaks to us. And my goal today is for you to be able to understand that. And it's not complicated. Even with I'm going to focus on 4 easy, simple ways for you to start to listen and read the market. And just that alone will change everything. Also, before I became a day trader, I was a fitness instructor. I was actually one of the very first fitness instructors in Manhattan to be teaching spinning and Pilates. And the reason why I bring that up is because we are very multi-dimensional, right? I get so many times people saying to me, oh, but I don't have a financial background. I'm not a math person. I'm not economics. I had none of those. I still have none of those. You do not need to do that to become a successful day trader. And that's the beauty of it. And the other thing is that I'm a travel writer. I still write. I still have a site that I've been running for over 12 years. To be honest with you, we normally travel 3 or 4 months out of the year, but with COVID, it's been pretty bad. Obviously, we all know, right? So, but I'm still writing about it. And actually, in 2 days, we're going to be taking our first international trip since COVID to Mexico, which is kind of cool. But again, we come from everywhere to be traders, and that's the beauty of it. Look, before I get started, I want you guys to download my worksheet. Literally, when you follow along with this worksheet, and Anna said earlier that she's going to be sending a replay, you can then follow along. Go here, makingofadaytrader.com, completely free. You will be able to have this worksheet to really follow along with the presentation so you get the most out of this presentation. So go there right now, makingofadaytrader.com, makingofadaytrader.com. Okay, right here, makingofadaytrader.com. I see that somebody came to beautiful Antigua, Guatemala. I don't know your name. It says trader, but that's very cool. I know. I love Antigua. It is truly a magical place here. All right, guys, did you get the worksheet? Let's go. Okay, so I'm going to be talking about basics of Guatemala, which is the language of Guatemala, okay? Your name is Orlando or you're from Orlando? Okay, so The basics, as in learning a language, you learn the basic vocabulary, right? It's the same exact thing with day trading. Look, today we're going to be starting to learn four different basic strategies, which I'm going to show you how and what the market is actually telling us. It's literally like driving a car. I am in this really unique position right now that my 17-year-old is learning how to drive a car. And when we sit down in the car with him, he doesn't, he doesn't really understand the language of the car. Okay, you gotta buckle up. You gotta shift your, put your gear into first by first press on the clutch, right? It's a language. We don't realize that, but even driving a car has its own language, right? Now it's so automatic to us, we don't even realize that it's a language, right? Or if you don't have a manual, you go, okay, so put it into drive, but make sure you put it into park. You have to go back, reverse, this is all language. And it's the same thing that happens with day trading, right? So the goal here is for that part to become automatic. And if it's not automatic, you cannot take a car that you don't even know where the brakes or the accelerator is and take it on the Autobahn where they're driving at insane speeds, right? It's the same thing. When you're going into the live market, guys, the reality is it's like being part of a Formula One race, right? Like your adrenaline is pumping, the action is moving, especially if you are day trading, you could be a scalper and going really fast. It is high energy, high adrenaline. And if you don't know the basics, if you don't even understand how to get out of your trade, and believe me, many people don't even know how to exit by pressing, they don't know what to press, which is amazing to me, and they're live. Okay, so it's literally the same thing as being on the Autobahn and not knowing where to press the brake or not knowing how to get off the interstate. Okay, so this is what I really want to talk to you about so that you guys can get it quickly and automatically. All right. So before we do anything, we're talking about day trading, right? Day trading is very different than investing. I'm not going to go into the difference here. I'm hoping that you guys understand that. But for day trading, you need to have equipment, right? You cannot just be scrolling on your eToro or Robinhood for day trading. That is not a professional day trader. Professional day traders, they have platforms. We use software, we use special platforms. I use personally NinjaTrader because I am a futures trader. I am not at all affiliated with them. There are many amazing platforms, but you need to have a good platform where you can get free universal indicators. Okay, do not buy softwares, do not buy algorithms, do not buy indicators. You don't need that. What you need is a platform. It's literally like getting a car that already comes with everything you need, but where you want to go and spend thousands of dollars on a stereo that's just going to go up one octave higher, right? It's useless. It's a waste of money. Honestly, I personally believe so. It doesn't do any actual real difference, and neither do a lot of those softwares. The majority of the softwares that people are selling right now out there, they are literally the only ones making money is them because they're constantly updating and telling you to pay them. But that's a whole other story. So you need your software, you need your tools, right? And your equipment. And this is mine. All of these, I use two indicators. And those two indicators, they're free: EMAs and MACDs. All right, again, like I mentioned before, makingofadaytrader.com. So you guys have the worksheet that I could show you that goes with the presentation. Makingofadaytrader.com. All right, guys, let's begin. Market movement and the breakdown of a trend. Look, we all know that there are three trends. We know it, right? Like, yeah, there's an upward trend, there's a downward trend, and there's a sideways trend. The thing is with a sideways trend is that I can guarantee you right now, when you open up your journal, your back testing, whatever it is, however you keep track of your trades, that 90% of the money you give back or even more during your trading day is usually lost during a sideways trend, right? During a sideways channel. All right. So this is really, really important. So just a really quick view again. This is the core. If you guys don't get this, it's going to be a lot of problems for you to really understand, right? So you have to understand about sideways trends. So we have a downward trend. Sideways is when it's bouncing in between 2 points and then upward, right? What's an upward trend? When each pivot is higher than the other. I mean, it's pretty basic stuff, right? Each pivot is higher than the other. It's called the bull market, market trending up, market going up. This is when you're looking to buy. This is when you're looking to go long. What does that mean? you're entering at a lower price point, exiting out at a higher price point. That is a trending market going along. Okay, this is when you're entering for that buy. What is a downward trend? Literally the exact opposite. Each pivot is lower than the other pivot, right? So what is this? This is when you are looking to short the market, where you are selling. What does that mean? It means you are entering at a price point that is much higher and looking to get out lower, okay? And you are taking the profit in between. If you're sitting here and thinking, oh, well, I never short the market, I never sell, then unfortunately, you're not really a day trader. Day traders, we do not care if the market is going up or down, because we are in it for the technical analysis. If you're an investor, whole other story, that's a whole other thing. But we are here to learn how to day trade, right? So that's really, really, really important to understand that you can sell, short the market equally as you can, if sometimes even better for day trading. Okay, so you're shorting the market. Okay, the market is going down. It's the bear market trending down. I personally am a scalper, as I mentioned earlier. What does that mean? I look for smaller, quicker profits. And what I also look for is overall momentum versus immediate momentum. So when you have an overall momentum, you're headed in one direction. It's totally cool. You're headed in one direction, but it can have a massive retracement, right? And that retracement is a mini trend, and you can monetize those immediate momentums, those retracements, those corrections, but then it can stop and it continue on up in the same overall momentum. So you need to understand that, because you could really monetize it and you don't want to miss out on those opportunities, right? Okay, so let's talk about consolidation areas and transition areas. Like I mentioned before, the sideways market, the channel market, I call it the trader's worst enemy, because this is where the majority of our money will get lost. So this is what it looks like. This is a consolidation market, right? Where it channels in between two areas. What is this area? Excuse me, what is this area? It's the indecision area. It's the exhaustion pattern. It's the chop. It's sideways market. It's whatever you want to give it the name. It does not matter. I get people like, well, it's not a sideways channel. It's the chop. It's the grind. Who cares? It's the same thing. It's identical to what you're saying. It doesn't matter. People get caught up on those names. It's nothing to do with the names. What it is this is a place where you do not want to enter. Why? Because we have no idea where it's going. Does it look like there's any flowing trend? No. So when there's no flow, that means it's going to be bouncing up and down, and it's going to be stopping you out. And the whole point of trading is not to enter just to enter, right? We enter to get really good trade setups, okay? We enter where there is confirmation. When you are sitting and looking at something like this, does this show you any confirmation? Absolutely not, right? And I get people who are like, well, the market's been sideways all day. I have to take a trade. I have, because I'm here. And I'm, no, you don't. You don't have to take a trade. It's kind of like hearing a surfer say, okay, I had Monday morning off. I'm going surfing, and the ocean isn't giving you any waves. So what are you going to do? Just go and flop yourself on a dead wave, on a silly little wave, just because you decided that you have that time? The market is literally like the ocean. It's going to do what it's going to do. It's going to bring you the waves it's going to bring you. We as retail traders, individual traders, have absolutely no control over it. So if you're sitting there and you're seeing absolutely nothing, but you only have 45 minutes left, and you want to get in just for the sake of getting in, and then you're going to bitch and moan that you lost money, well, that's your fault, because there are three incredibly important positions in the market. Number one, knowing when to get into that market. Number two, knowing when to get out of that market. And three, the most important and undervalued position, is knowing when to stay out. It is critical to know when to stay out, okay? So understand that, and once you admit it and you permit yourself to understand that sometimes there might not be anything, and guess what? You're sitting on the money that you did not lose. You're doing good. Okay, so that's really important, and that's usually during the consolidation. Is there a way to get that in writing? To get what in writing, Henry? Sorry, I'm not sure what you mean. The link, it's makingofadaytrader.com. I think that's what you're talking about. Otherwise, I'm not sure. Okay, so consolidation areas. You have to understand where they are bouncing in between areas, right? You could have small consolidations, You could have large consolidations. You could have multiple consolidations. But if you don't understand where they are, you're just going to be caught up and you're going to end up losing all of your money because you're going to be guessing. Okay? This is a sideways market and they are dangerous, but they are very easy to avoid. And that's what I want to talk to you about today. Because these areas, they work in these sideways markets, consolidations, transitions, whatever you want to call it, are in between areas, right? They're in between areas. And the market respects areas, and we need to as well. And what are those areas? Support and resistance. And these are critical. So for me, support and resistance areas are like safety gear, pretty much, right? Like if a Formula One driver hops into their car for their race, there is not even an inkling of a doubt that they're going to put on their helmet, they're going to put on their seatbelts, they're most likely going to put on a fireproof suit because 25%, and they know this, 25% of the drivers get fatally injured or fatal, I guess, die, unfortunately, right? 25% during a racing season. So do you really think they're going to get in the car and just go without any of their safety precautions? No. Yet day traders, aspiring ones, just go into the market. They have absolutely no clue how to read the market. They are not prepared. They do not have any safety. I'm not even going to go into the idea of putting in a stop loss, which should be the number one safety you should always have. It should be a given. But I'm talking about the other safety that many people don't talk about as much, and that is support and resistance areas. If these areas are respected by the market, and you don't understand that, and you keep on going into these areas and losing, that's because you're not putting on your safety belts. You're not putting on your seat belts, right? Because these areas have been respected. This is where it stops the market from moving. So what is a resistance area? What is a resistance area? It is the ceiling of the market. It is where the market has hit it several times over and over and over again, and it stops the market. It is a resistance area. You need to draw it in, you need to be aware of it, and you need to respect it. This is a resistance area. Now, like I mentioned earlier, I'm a scalper, so I actually only trade for maybe about an hour per day because I just cannot do any more. That's the amount of energy that I really have. Once my energy is depleted, I go into emotional trading, and we never want to be into emotional trading because that really is just disastrous. So when I have a resistance area that I drew in, and this is about a session of mine, and it keeps on hitting that, and could over a session, it could actually sometimes even over 2 or 3 days. You need to understand that and stay away. When you see those resistance areas, stay away until it breaks it or bounces off of it entirely into a new trend. Okay? Now, what is a support area? Support area is the floor of the market. It's the floor of the market. It's where the market has hit it over and over and over again, 3, 4, or more times. It is a very important area. You need to understand it. Support area, right? This is what it looks like when the market could be going super strong down, but once it hit those areas, the support area, you have absolutely no idea if it's going to continue or not. So you don't want to be pretending that you think you're going to predict what the market says or that you're going to beat the market, because you know what? That's a whole big lie. None of us will ever beat the market. None of us will ever predict it. But what we can do is read it. And if it's hitting this area, you sit back and wait until it gives you confirmation of a breakout or a shift. Okay? And resistance areas, support areas, floor, ceiling, and this is where that channel is bouncing through. If you guys can't spot those floors and ceilings, you're going to be caught up and you're going to end up losing all that money. Look at how indecisive it is. Look how it's bouncing. Do you want to be in that kind of an area? No way, never, right? Why would you ever want to look at it? It's so undecisive or indecisive. I don't know how you pronounce it properly, whichever. You guys get the point, right? So it's really, really important for you to understand what that is. Okay, let me just read your questions really quick. Sorry, I made a mistake. If you have writing, please send it to me. I'm not understanding what that is. Okay, it looks like you are using tick charts. Are they any better? So I personally do use tick charts. I will go into the live market and show you why. So if I don't respond to that, then remind me, please, but I will show you why I prefer it. So Look at this. I'm just going to say this again because as much as I say it, I still get all my students sending me stuff, forgetting to put in their resistance support areas, going into channels and losing money and saying, what did I do wrong when I say it's a sideways market? And that should answer pretty much 80% of your losses and clear them up. All right. Support resistance areas. All right. Now, here's the thing. How do we recognize support and resistance areas before they actually become those areas so that we could get in understanding early enough and stay out early enough? Reversal patterns. This is my telltale signs. I love reversal patterns. This is what I listen to the most. This is 100% free on any software. Okay, what are reversal patterns? Triple tops, triple bottoms, double tops, double bottoms, head and shoulders. Those are just a few, right? So what are they? Look at that, triple top. Whenever I see any reversal pattern, I'm already staying out of the market. But when I bring it in with divergence, that's it. Like for me, that is almost 90% telling me that the potential of it to change direction or go into a flat market is there. And you never want to be in the market where it's 90% working against you, right? So here is divergence. What is divergence? It's when your pivots of your price action are going in one direction, and I personally use the MACDs. Those pivots are heading in the opposite direction. I love the MACDs because to me, I find it to be the least lagging indicator. The majority of indicators are quite lagging. So I find that the MACDs already tells me way in advance when there is going to be a slowdown or weakness in the market. And the same when I have that massive confirmation, it shows me that strength in the new trend or in a breakout. Okay, so here's a double bottom. Look at that. Double bottom with divergence. Boom, the beginning of a mini support area, and then it finally changes direction. Same here. However, I personally also stay away from actual divergence. As you can see here, this pivot and this pivot, they're flat here, but it's completely going down here. So it's showing me that there is weakness happening in the market. And then boom, once it shows me this double bottom with massive divergence, I know to stay out. It is not telling me that it is going to shift direction. What it is telling me, it is a very high potential. And we never want to be in the market when the potential is against us, right? So here's the triple top. All right, divergence. Now, I want to put this all together. Remember, everything I've been talking about and more is in makingofadaytrader.com. Hang on a second. Okay, breaking out of areas. So, what is one of the most powerful trades out there? That's the breakout trade, right? We have all heard about these breakout trades. They're awesome. They are probably some of the strongest and most powerful trades that you could have. However, if you are not prepared, if you don't recognize where there is a support or resistance, how are you going to see what a breakout is? How are you going to see where the breakout is? So I want to put this all together for you and show you the breakout. Okay, so what is a breakout trade? Think of it like this. Imagine one of your friends who you know really, really well, you know where they live, calls you up and they're like, come over. And you hop in your car, you're full of confidence, you know exactly where to go. You pretty much could do it with your eyes closed. Hop in, and you live south and they live completely north of you. Okay? So you hop in, you get on the highway, you know the highway super well, but all of a sudden you're driving, there's this huge construction site and the road is closed. And they're pointing you to go east, to go to the right for a detour. So what is a detour? The detour is that sideways area, it's that indecision area. Why? Because when I go through detours, I freak out. I'm like, okay, what if they stop with a detour and I get lost in this tiny little town? What if they never reopen the road and I have to take these tiny little streets all the way up to my friend's house? I have no idea where I am. What if I'm in a bad area? Blah, 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 right? There's all this doubt. There's all this stress. There's all this fear in my mind, right? Like I'm not comfortable. I'm not secure. Uncertainty, right? So this is that area. It's that consolidation area. When you're sitting through that kind of, uncertainty, unsureness, do you really want to enter a trade? No, you have no idea what's going to happen, right? However, you're driving a little bit further. Finally, the construction road worker Oh, it says, okay, the road is fixed. You guys could head back on that highway again. Boom. You hop on the highway and you take off. That's the breakout. Okay, that's that breakout when you have that confidence again. You're back on that road. It's that confirmation saying go for it. That's the breakout. But if you don't have your resistance or support areas built in, how are you going to spot it and how are you going to understand it, right? So again, I'm showing you right now, upward trend, the same exact thing could happen with the downward, right? Just shift it, just mirror image it, or negative, right? Put like the negative of it. Um, okay, so this is, you have to understand, that's that breakout trade. If you don't get it, you're going to miss out on one of the best trades out there. So here it is, okay? I personally use my MACDs and my EMA lines for my entries. When right here, that dash line is that zero line of my MACDs. You see this massive spacing? And right here, I have that breakout, boom, it's going. I enter all my trades from my EMA lines. That's what I use my EMA lines. It's kind of like an archer. You know, archers walk, you don't ever see archers just walking around shooting arrows. They have a really defined place to stand from to shoot their arrow. That's the same thing for me. So my EMA lines are exactly like that. I also want to talk about another really important trade because, like I said, there's two things that could happen. You could have a breakout or you could have a transition of the market. So you also have to understand where that happens. So here is that resistance area. Now it's shifted direction. I have massive, massive strength with my MACDs. It retraced back to my EMA. Boom. This is what I look for. No divergence. This is where the very beginning of that trend change of trend trade, that's the best place you could enter because that's the most amount of strength. Okay, last time making of a daytrader.com, and now let's hit the live market. Okay, guys, so this is my charts right here for you. Okay, I am on the ES, which is literally the S&P 500, but on the futures market. So somebody asked me about what is a 6-10 tick chart. What is a tick chart? So the reason why I prefer tick charts is because it is volume in real time. As you can see right here, each one of my bars, it has 610 transactions happening in the live moment. I have my tick counter, which shows me, because the most important thing with trading is volatility. You want to know if there is volatility, how much is it moving. If you're on a 3 or a 5 minute chart and using a volume indicator, I find volume indicators quite lagging, so I don't really enjoy them. But you don't really know what's going on in that moment, right? Like you don't know exactly what the real time volume is. And that's the beauty of the tick charts. And I put in my tick counter so I see exactly what's going on. And this is moving super quick. So there's a lot of volatility, right? So I like to see that volatility. Here is a really great example of a really strong resistance area, right? We even have this support area here as well. Now, we've been going up, and then it had this detour, and then boom, it broke out. I would be all over this trade right here. Look at that, beautiful, massive, massive strength of the MACDs, no divergences, massive movement. It retraced back here. But if I did not have this organized properly, if I did not have my areas drawn in, I would miss out on this trade. And these trades are like 90% that work out. You always want to be in a trade that is at least 75 to 80% working out, right? And now we have a pretty significant area right here, right? This is a pretty significant channel here, right? I mean, look at it. It's huge. Now, what's different about this is that it's a little bit wider, and you can kind of start to see if it's wider and if it's actually giving you nice movements, then yes, you could definitely enter some trades. However, I don't see this. It looks really like all over the place, right? It's just boom, 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 boom. It's not really giving me that fluidity of a normal market, of a normal flowing market, right? And that's what we need. We always want to see where that fluidity is, that moving market. Okay, so let me know if you guys are understanding, if you need any, if you want to see my indicators, any questions that you have, let me know. But this is what I use for my charts. Okay, so if there's no questions, I am going to be continuing on. Hang on one second here. Okay, so I actually have a real important question for you guys. Do you guys have a trading plan and a strategy that you follow or that you are maybe struggling with, or even worse, that you do not even have one at all? Let me know. Do you guys have a strategy and a plan that you truly, truly, truly believe in and completely trust? Let me know that question, because what it's all about is simplicity. Okay, I have learned to simplify the market. As you saw, I do not use anything fancy, no fancy platforms, no fancy indicators. I use total simplicity. I have two indicators and that's it. And I literally just read the market. That is what I do. It totally takes away avoiding the stress and the analysis paralysis. I used to have 10 indicators that I used to use, 10. And I used three monitors, right? I was in constant stress mode. I was in constant freak out mode, and I was in constant analysis paralysis. First of all, by the time I entered a trade, then I would be freaking out. It was just horrible, right? So I have mastered the art of simplicity of taking the trades. I help day traders read the markets with confidence and ease and master the art of high probability trade setups with total simplicity. Look, this is a reality check. Too many seasoned and aspiring traders are experiencing more losses than wins. This is a truth. It's an ugly truth, but it's a real truth. And it's something that could be superly easily avoided. Totally. Look, I always have traders coming to me after presentations and asking me, how do you trade from anywhere with just your laptop and only two indicators? So how do you do it with only a couple of hours a day and be profitable? I'll be honest with you, I actually only trade for 1 hour per day. I cannot handle two anymore. It's just too much. And why would I need to? There's always going to be at least one or two good trades. Always. And those 1 days out of maybe a year where there isn't anything, big deal. Like I said, the surfer who accepts that there's no waves for that day simply enjoys watching the ocean. So I started making videos, easy tutorials, and before I knew it, I had created an entire library that I want to share with you right now. I want to introduce to you Simplifying Day Trading Futures course. This is my signature course. You could do it on any apparatus, iPad, iPhone, desktop, laptop, any kind of table, a tablet. And what you get in this course is simplified e-mini package and a 30-minute platform setup. So many people are struggling with just setting up their platforms and get so frustrated and start going live without really understanding the platform, and then they end up losing money because of that. So I have that 30 minutes, boom, you are set up and ready to go. We will be talking about dissecting markets, uptrending, sideways, but really diving into it. Magic telltale signs of reversal patterns, divergences, and understanding those important trades, those breakouts, those entries. So everything you're going to get here, preparation for the trading, understanding the different back testing methods, because back testing is crucial, and trading in the moment exercises. You're going to be working exercises. Also, you're going to be getting live support with going live and maximizing profits while you're minimizing your risks. Plus, you get a solid trading strategy and plan that you can completely trust under any market condition. And it's not going to just be given to you. You're going to actually understand why it works the way it works. Plus, you'll have unlimited access to the curriculum, which is priceless. So everything you're getting here at the moment, right now, the platform setup, the understanding and breaking down all and implementing the language, the breakdowns, the step-by-step mindful trading guides, going live support, and your solid strategy is valued at $2,000. But here's the thing. You have everything that you need to take action. Everything, always, right? Even if you're self-educated, you have that actually, right? But how do you know you are doing it right? How do you know you're doing it right? So here's one of my students who's showing me a triple top. But the market is going down. Why do we care if it's a triple top? What we're looking for are, excuse me, reversal patterns going down to tell us when it could change direction. Here's another one of my students showing me a resistance area, but the resistance area is 6 points when we're only looking to enter in for about 1 or 2 points. He's missing out on massive movements simply because how do you know you're doing it right? So here's what some of my students tell me. I have students from all over the world. That's the cool thing about trading. You can do it from anywhere in the world, does not matter where, as long as you have internet. So I have traders. This is John. He was telling me, I can't even explain how important and how many aha moments I've had with her easy to follow modules and mainly support. Chad, after talking to Marina, I knew our trading styles were similar, but something was missing from mine. I started applying what I learned from her, and it's helping me keep out of my chop. My win percentage is increasing. I wish I could have found her 5 years ago. Dawn, Marina truly helps for students learn trading skills, confidence, and teaches proper habits to reduce the greed tendencies. Let me share something with you guys. The number one bonus you're going to be getting is 6 months of one-on-one mentorship with me. You will never have to ask yourself, how do I know I'm doing it right? Because I am going to be there supporting you. This alone is worth valued at $1,700, and my students say that this was the most important element of the course. And on top of that, the other bonus is you will get multiple trade setups customized for you to use in any market condition, even today's uncertainty. Valued at $1,500, but you will get this working with me one-on-one. Everything so far is valued at $7,000. Now, imagine this course finally can allow you to make $50,000 to $100,000 per year trading. It will be completely worth it. Imagine if all this did was cut your learning time in half. If my course could shorten your time to get you in a trading goal by half the time and avoid the pain, frustration, so much wasted energy, wouldn't that be worth that one-time payment of $7,000? I have purposely made my course unlike any other. My years of experience with my simplified strategy is what will take you to that next step and really help you excel in your day trading. Here's the deal. I could have made this program super cheap by my investment in my students. The time I spend with each student during their mentorship and coaching that I offer cannot be offered to a widespread amount of students. I simply won't be able to focus on everybody. So that's why I have created this program so uniquely. So many traders fail, right? This is a known fact. I'm not even going to sugarcoat it, because the reality is, do you really want to be another statistic? But with simplified day trading futures, you will not be that statistic. If you were a successful trader right now, financially, fully supporting you and your family, plus getting to know what you love, to do what you love for only a short period of time per day, what's that worth for you? How much would you invest to live your life doing what you love and to finally have the time for yourself and family and not to worry about money? You can see why people say $7,000 for these results and pay for it, because it's not a cost, it's an investment. However, for you guys, for the participants only of this class today, I am giving you a special of $448. Remember, it includes 6 months of working one-on-one with me. You can go right here, right now, simplifyingfutures.com. Go there right now, simplifyingfutures.com. Right now, okay? So let me go over really quickly some of your questions. Do I ever trade initial breakouts or only retracements? I only trade retracements, because with just initial breakouts, that is not a strategy. At least that's not mine. I like to see that confirmation and that mini retracement. The mini retracement is kind of like when you're first running out the door, you pause for like a split second and then you get that extra energy. That's what a retracement is for me, Thomas. Channing, you have no plan yet. So please do not go live until you have that real plan. You cannot be live, right? Because you don't have anything to fall back on. Carl, my trading plan is irrelevant to what the markets do. That's untrue. Carl, if you have a strong market plan, it could go with any condition, because it's not about the market. It's about what the market is telling you. And that is the crucial part of it, okay? Channing, about how much money would it take to upfront my day trading full time? Again, full time takes a while, right? However, if you want to start with futures, you could easily begin with $500. With stocks, you need a lot more. Crypto, you need a lot less. It depends on the market that you want to go into. but start small and grow big. Okay, Tom Hanks did not start earning $20 million a picture when he first began, right? He was lucky to get anything because he was learning. Now, Gladys, I don't have a large account for today's trading. I never trade, just learning. You do not need a large account. That is a total misconception and a total lie. Again, Tom Hanks did not start getting $20 million with his first movie. If he was lucky, he maybe made $100 or $500. And guess what? He was thrilled because he was finally doing something right. And that's what it's about, learning to trade. Now, go guys here, simplifyingfutures.com. Simplifyingfutures.com. This special is only for people who are here right now participating with me. Here's more testimonials for you. Stick to futures. Marina's course will change your life. Okay? The thing is, guys, this is another really important thing. I only have 25 spots. Like I mentioned before, I can only take a certain amount of people because it's all about me giving my time to you guys. So I only have 25 spots available. And on top of that, right before we go, 1 month free live trade chat room. 1 month that is free included. So sign up right now. Simplifyingfutures.com. Simplifyingfutures.com. Let me know if you guys have any questions at all, please. And I really hope to see you guys in the course. Remember, you are working with me 6 months. That alone is enough time, first of all, to totally learn everything and go live. And I am going to be there with you going live. That's support. And in the live chat room, you can meet the others in the community also who have gone live and really get that community and that support. Simplifyingfutures.com. Thank you so much, Anna. I really appreciate being here again. And thank you, everybody, for taking your time this morning to be here. And again, I really appreciate everything and thank you. And if you have any questions, let me know and go to simplifyingfutures.com. Thank you.
Okay, hello everybody, and thank you InvestorExpos for inviting me here today to speak about a topic that I'm very passionate about, how to help traders reach their full potential as traders and reap the rewards that trading brings. In this presentation on the top 3 trading habits for 2021, which is based on the Trader's Pendulum book that I've written. And this is what my book is all about. It gives you a practical foundation to building your trading business, building that trading account. Are you spending too much time spinning your wheels without making progress? Not sure which techniques to apply? Want to waste less time analyzing the markets and more time taking profitable trades? So stick with me until the end, where you will learn about my Wavy Tunnel Pro program coming up April 11th, where it teaches you all about the market cycles, the trends and corrections, how to set your profit targets, how to set your stop losses, how to even know that a trend is about to begin. So stick with me until the end. But for the first part of my presentation, I am going to put on my coaching hat so that I can help you see a clearer vision for your trading business by sharing with you what I think are the 3 top habits for you to develop in your trading business. Here's the disclaimer. All traders ride on a pendulum every day. Unsuccessful traders ride the pendulum back and forth with no real idea of the pendulum's swing. Can anybody relate to that? Successful traders recognize that the pendulum swings and ride it mindfully. As a result, they make better decisions and better trades. The market pendulum. There's nothing that you can do about the market swings. The market trades up and down all the time. But skillful traders know when to enter and exit a trade. They have learned how to recognize the pendulum swings in the market and not to enter the trend trades after extreme and exhaustive moves. They readily understand the market cycles and enter after corrections or on a break of previous market highs. The pendulum, the market pendulums are the trends and the corrections. Really important to internalize the trends and the corrections and to have a trading strategy which can help you with that. To trade the market pendulum, You need to have a strategy which you can use to trigger your trades and exit your trades. And I use Elliott wave analysis to ride the market pendulum. Getting back to neutral when the market is overbought and due for a correction, this is how the market moves. It usually moves back to the moving averages if you're using moving averages. So again, it's important not to buy when the market is in an exhaustive state. Financial pendulum. Making money from trading isn't a one-way street. On the one end of the pendulum swing, there are times when you make money, and on the other end are times when you lose money. But both winning and losing money are part and parcel of trading. Every trader loses money, even successful traders. But it's important, and some of you might be able to relate to this because I've heard it so many times from traders, it's important not to bet the ranch so that if it's a losing trade, you lose the entire account. So many traders do that. They have a few winning trades, they get really excited, and then bet more, take a bigger position, and then lose what they've made the rest of the week. It's all about managing the money in the account so that when you win, you win bigger than when you lose. Emotional pendulum. The emotional pendulum, I like to describe it as the fear and greed continuum. On the one end of the pendulum swing, you have the desire to earn more money from your trades and might be driven by greed to take larger positions irresponsibly. But on the other end, you are in fear of losing money and your actions might be held back from fear. And traders tend to be in fear of losing money if they've had a small string of losses. Learning how to balance between these two factors is the focus for you as a trader investor. So greed can lead to exuberance, and fear can lead to despondence. So please watch these emotions. Here are some of the emotional pendulum scenarios that traders deal with every day. And fear versus greed summarizes the first few emotions below it. Self-doubting can lead to fear. Overconfidence can lead to greed. Being cautious can come from fear. Reckless trading can come from greed. Being organized in your trading, really, really important. Know what times of day you're going to be trading every single day. What I like to tell traders is to get a schedule. On the weekend, put your trading schedule in so that you know when you're going to be sitting at your machine and stick to your schedule. And also use that as your personal schedule where you also put in times when you are, taking a break, working out, doing other things. Otherwise, you can sit at your computer screen all day long and it's just a waste of time. I've heard that from a lot of traders as well, and believe me, I've experienced that myself. Flexible versus stubborn. Yes, it's really important to be a little bit flexible and let the market come to you. Don't have a fixed view on the market. Now, I'm not saying not to follow your trading plan. I'm saying not to have such a fixed view if the market is moving against you. So one way to temper the emotions is to have a trading plan to protect against the emotional swings that can be damaging to the P&L. So the more objective you can be with your trades, with your trading decisions, the less emotional you will be. The more objective, the less emotional. And we as traders need to get out of the emotional state. Otherwise, we get into trouble. So I'm going to tell you about two traders. Farah and Fred are technical junkies in the technical traders trap. Both of these traders have been moving from system to system, guru to guru. They've been spinning your wheels. They're out of shape. They don't have a business plan. They're not making money consistently. They lack discipline. They trade emotionally, and they don't have a trading plan. And that's a problem. I call them the technical junkies. They've fallen into the technical traders trap. So now I want to ask you the question, do you want to remain in the technical trader's trap, subscribing to service after service and not getting anywhere, just spinning your wheels? Or do you want to become an entrepreneurial trader like Stacy and Steve? These are our transformed entrepreneurial traders. So let me tell you about them. At the other end of the spectrum, Stacy and Steve both started their careers slowly and steadily, and they developed business plans. They have their trading strategy so that they've defined within their business plan, and it took them a while, but they're making money consistently, and they trade with discipline. And then the other word for discipline is habits. Many of you have heard me say that I like to talk about habits, that if a trader develops good habits, solid habits, then comes the discipline. So it's just a simple developing trading habits. And one of the habits that we just discussed is putting in your trading times for the week on the weekend. So just putting it into your calendar. That's one great habit to follow. These traders, Steve and Stacy, they trade unemotional. They've learned how to balance their emotions on the fear and greed continuum. And they have a clear trading plan that they can follow. So in short, they are in shape with their trading business. Here's how Steve and Stacy became successful. This is the trader's quadrant. Steve and Stacy both moved from the left side of the chart to the right side. What does it take to move from the left side to the right side? Learning the habits of successful traders, which is the subject of this presentation. On the left side is the technical trader's trap. And believe me, new traders and experienced traders can live there forever if they want to. And on the right side, you have your transformed traders, and it can be a new trader or experienced trader to live in transformational villas. But let's move back to the left side. Do traders on the left side keep track of their trades and learn from their mistakes? That's one habit to develop. Keep track of your trades and learn from the mistakes. They probably don't. Do traders on the left side trade at organized times during the week? Probably not. Do traders on the left side take trades and hope for the best? Probably, without a plan, without a trading strategy. On the right side is the transformed trader. A new trader can develop good habits right off the bat and become successful. An experienced trader can learn from their mistakes and become successful. So let's jump right in. I told you I'm going to talk to you about 3 habits today. The first habit is called understanding and exploit your unique trading personality. What trading style do you prefer? There are many different trading styles due to the simple fact that everyone is unique, and different personalities are better suited to certain trading styles. So if you enjoy sitting in front of the screen watching the market action, you may prefer momentum or day trading. If you like to analyze the markets, establish your trade plan, let your trade play itself out, you might be better suited to swing trades. You might set 3 different profit levels and hold positions for 1 to 3 days maximum. And as a long-term position trader, you are looking to hold your positions for at least a month if the market is going your way. And you might look at your trades once a day. Once a day, that's it, just to make sure that you're on top of market events. For this, you do need mental stamina, patience, and the ability to ride out drawdown. So I'm basically mainly talking about a stock portfolio. And there's no right or wrong style. The key is finding the style that suits your temperament and lifestyle. So let's just go back to short-term momentum or day traders. Many traders start out trading that way because you can do a lot of trades if you're a short-term momentum or day trader. So in fact, I would advise that on a demo account, of course, just to really learn how the market moves, how the market trades. and you're taking a lot of trades, so that might be a good place to start. And if it doesn't suit your personality, that's fine, because you can quickly move into swing or micro trend trading, or even long-term position trading if you have a full-time job. Many people do have a full-time job, so that could be a blessing in disguise, because with a full-time job, you don't have the time to sit there all day long looking at the markets. And I'm sure some of you will agree with that. And some of you that are working from home because of COVID, oh, I don't know. Are you busy looking at the markets during your job? Maybe. So this is all about understanding and exploiting your unique trading personality. Now, there are two types of traders: systematic or discretionary, and they are at opposite ends of the spectrum. But you can be a discretionary trader with a system, and you can have a mechanical system and semi-automate your trade. So for example, semi-automate when your system tells you to enter a trade, or semi-automate once you take your trade and you want to set your exit strategy. So there are many ways to program the trading platforms these days for semi-automation. But what is a discretionary trader? A discretionary trader pores over the charts and has a system and a trading strategy, then makes his decision and watches the screen in order to pull the trigger for the trade. And that could be day, swing, or position. He still has a system, but there is a human component as well. The only problem is he might not pull the trigger every time, or he might assign probabilities to the trades and only take the ones with higher probability. So it's totally up to you as to how you manage your discretionary trading business. A systematic trader will spend hours each day testing systems on several different markets. And it's not as easy as just setting it and forgetting it. A system trader has to constantly review the trading system. And what are the benefits of having a system? It removes the emotion. I think traders get into the most trouble when the emotions are tied to individual trades. But if you are going to use a system, it's really important that you develop confidence in yourself and that you don't follow somebody else's system, that you know exactly what's behind it. So whether you go systematic or discretionary also depends upon the trader's temperament. And I know what some traders do is they learn a system and they trade it discretionarily and then program it. Habit number 6, follow a system. Successful companies have winning formulas and systems. So if you look at highly successful organizations such as Microsoft, Amazon, or Walmart, you'll find these companies are doing the same thing the same way every day with consistency. They find a winning formula and adhere to it. Ask yourself if you have a winning formula to get that trader's edge. And if so, are you executing that formula or system consistently so that you have the confidence in your ability to follow it? The system that we use is the Wavy Tunnel Pro system that is a combination of Fibonacci, Elliott wave, and harmonics, using the Wavy Tunnel strategy to determine whether the market is in a trend and to capture the trend moves, or to determine if the market is running out of steam. I'm going to tell you about that at the end. But what's really important is to develop your own game plan or system, again, for your trading style and temperament, so that you have the confidence in yourself to follow it. That's the most important thing. So many traders tell me that they don't have confidence to follow what they're doing, to follow their systems. So that's one of the problems. So how do you get confidence? By practicing, by just being in the markets and putting in the time. That's really all there is to it. So you have three things on the chart here: the chart setup, general rules, and entry and exit rules. The chart setup is where you define, in the chart setup, you define which markets you're going to trade, what time zones you're going to trade in, and what time frames you're going to trade. So obviously, if you're a day trader, momentum trader, you're going to trade the smaller time frames. And if you are a long-term position taker, you are going to look at the bigger time frames. The most important thing is for you to do somewhat of a top-down approach, so you can see what's going on in the bigger time frame, even if you're trading off of the 1-minute chart. And some traders like to dress up the chart with indicators, and others like to just look at the price action. That's up to you, what you feel more comfortable with, but it's all part of the chart setup that you follow. And the most important thing is that whatever you use, it helps you to identify the new trend and the end of the trend, so where you can get in. General rules. I like to tell traders to create a set of rules that hold true all the time. So it mainly serves as a reminder for you to stick to the plan. In fact, that can be one of the rules: stick to my trading system and my trading plan. So I would suggest coming up with a set of rules that you find yourself breaking all the time and reading them before every trading session that you have. Entry and exit rules. What triggers the buy and sell decisions? You need to be aware of what your strategy, how your strategy triggers whether you're going to be buying or selling. And this is part of the trade plan. And the trade plan includes your exit strategy, which is your stop loss and your targets. Otherwise, if you don't set a stop loss, let's say you're buying, I don't know, you're buying a stock or you're buying gold, and the market or currencies, and the market starts to move against you, that head is going to think, well, it's not going to go down much further. I'm going to just hold the position. And then what happens? It goes down a lot further than you had planned, and you end up losing a lot more money than you planned for. So you can always get into the market again. It's really important to set your stop loss. Even if you get stopped out and it starts to go back in your favor, you can always get in again. But that takes flexibility, and you can see how you do yourself if it helps to put a stop loss in. Because many traders tend not to put stop losses in, and then they watch the market. They watch their hard-earned profits just disappear. Just disappear. Okay? So let's just look at this chart. Let's just have a teaching moment to explain about trends and corrections. These are 3 different time frames. The red line is the long term. I said to do a top-down approach. So let's say the long-term red line is the daily chart. Let's say the blue is the 4-hour chart. Let's say the green is the 1-hour chart. So this would be a really nice swing trading setup. And the definition of an uptrend is higher highs and higher lows. This is an uptrend on the left, and it's actually a downtrend on the right, lower lows and lower highs. If the long-term trend is up, the medium-term and the short-term trends will cycle through the trends and the corrections, giving multiple buy signals along the way. But you need to know what the overall trend is. If it's up, then you want to be buying the dips. So you see the blue arrows and the green arrows. The green arrows are the 4-hour dips. The blue arrows are the 1-hour dips. Actually, that's the opposite. The green arrows are the 1-hour dips, and the blue arrows are the 4-hour dips in this daily trend. So remember what I said, that you don't want to buy something at an exhaustion point in the market. So when the price action has traded away from the moving averages, you might want to just wait for equilibrium. Wait for the market to come back to the averages before getting in, before buying. It takes patience. I'm not going to lie. It definitely takes patience, and you might have to set some trade alerts to, at different levels that go off when price has come back to the averages. And then you can take another look at it and decide to buy. So this is an important graphic take note, and then once we reach a market peak, this is how the price action moves. We have a 3-wave move. I'm an Elliott wave person, so the markets move in cycles, and that's what my program is all about. It really shows you how to trade these market cycles, and I think that a lot of traders miss that in their education, in their trading education. At least that's what I am told by many of the students who have worked with me in the past. Here's another example of a chart showing moving averages. This hourly chart highlights the moving averages that capture the broad trends in this market. It doesn't really matter what market this is. We don't have price along the side because the markets are fractal, and these patterns show up in every single market, in every single asset class, in every single time frame. When the moving averages are pointed up and separating, as they are here, the uptrend is in full force and the trader can buy the dips. So this is an example of an exhaustion point where you don't want to be buying up here. You want to wait for the market to come back to the averages. When the moving averages are twisted and sideways, as they are within this box, the market is in a sideways consolidation phase, and it's best to wait for trend continuation before buying in an uptrend or selling in a downtrend. Now, this is really key. You can buy on the break of this, or you can buy when the market pulls back a little bit. We don't really have too much of a pullback here, just in this general vicinity. If you want to see a pullback because you just feel more comfortable with that, you might have to go down to one smaller time frame. Okay, so this is a sideways market. You can see that the moving averages are intertwined, and then they separate, and the market continues on its merry way. Price moves up in a trend. So it's really important to get in on the trend and not to get in after at the top of the trend. Always wait for the pullbacks. Habit number 7, plan the trade and trade the plan. I know you've heard that before, but let's start with the difference between a trading system, trading strategy, and trade plan. A trading system is a collection of trading strategies. So you might have, in my Wavy Tunnel Pro program, we have 6 different trading strategies. 4 are trend trading strategies, and 2 are end of trend trading strategies. And I teach you all the strategies, but some traders are really comfortable with 1 or 2 of the trading strategies, and they just stick to those. And again, it boils down to the trading personality. What works for your personality. Trading strategy is, I would say that we have separated into trends and end of trends, entries and exits based on whatever your strategy is, price action, analysis techniques, and our chart setup with indicators. The trade plan is a set of rules for when the trade opportunity arises. So the path to greatness lies not only in our performance, but in the systematic practice we put into it. It's important to internalize the patterns, rehearse your execution skills, and learn from market feedback and prepare the trade plan. Let's go right to the trading blotter. In a trading day or a trading week, depending on what your style is, the top row, the top part is the analysis. Now, this is a trading blotter. You print this out and you fill it in. You can create your own trading blotter, okay? And then the middle part is your trading strategy, the checklist, the trading rules, indicators, and confirmations to tell you whether to go long or short and at what price. The trade plan is for trade number 1, whether you're long or short, what your position size is, what the price is, and then what's your exit strategy, what's your stop loss, and what are your profit levels, and what's your risk reward on the trade. So this is your trade plan, okay? And you might want to put down your reasons for entries and exits as well. Then the post-trade analysis at the bottom is when you're analyzing your trades that you've taken, You want to know how you felt before, during, and after. That's basically what this is. You can take a screenshot of this and create your own trading blotter. I'm just going to talk to you about trade management. Trade management is really important. It really makes a difference between a very successful and profitable trader and a not so. And strategies 1 to 4 go from simple to more complex, and which strategy to choose is a function of the trader's experience. Getting in and out all at once, that's how traders first start out. That's it. You'll learn, you get in, and you get out all at once. Number 2 is what we're going to focus on. I'm going to show you the 3 profiteers, which is the trade management strategy that I developed. It's getting in all at once and taking profits at various levels. And then if you want to get more complicated, you can get into the position at various levels and get out all at once, or get in and out at various levels. So we're going to focus on 2. It's called the 3 profiteers. And it's good for maintaining balance on the fear and greed continuum. It's perfect for perfectionists who want to capture every last pip in the move. So when I developed this, I guess I would categorize myself as a little bit of a perfectionist. A little bit? Oh, well, maybe yeah. So this is what a perfectionist does. A perfectionist gets annoyed when the market moves your way, you get out of the position, and it continues to move your way, and you have nothing left. Or the trade moves your way and you say, well, I only have this position size. You don't take your profits, and then it moves back to break even, and it even moves against you. Okay? So that's what a perfectionist is. Me, hello. So that's why I developed the 3 profiteers. Now, you divide your trade into 3 positions. That's what you do. You just divide your trade into 3 positions. That answers, Jean, your question, how much cash you need to do the cash out in increments. You just, whatever your position size is, you have to make sure that you can do it on your platform. So the first thing that you do is you determine the potential profit area, the PPA, and assume that the PPA is 100 pips. That's in Forex terms. Or with stocks, use the dollar amount. So the PPA is $10 or $100. Then you use the Fibonacci sequence, which is 8, 13, 21, 34, 55, 89, 144. It actually starts earlier than that. And pick 3 profit targets, the third ending at your PPA. So because I said that the PPA is 100 pips, you would work backwards, and from 89 pips to 55 pips to 34 pips. And if it's $10, if that's your PPA, then it would be $8.90, $5.50, $3.40. If it's a $100 move, if you've been trading Tesla, then it's $89, $55, and $34. Got it? So let's just continue on here. A simple way is to set your stop loss at your first profit target, which is 34 pips, because we said 34, 55, and 89, and move your stop to break even once the first profit target is met. So you move your stop to break even once the first profit target is met, and then you move your stop to P1 once P2 is met. So this is like trailing your stop in a way. Not exactly. It's trailing it in this way. And you calculate your risk reward. You're making 89 plus 55 plus 34 pips divided by 3, average of 59 pips. Your risk is 34 pips, so it's 1.74 risk reward ratio. And with stocks, you're making on average $5.90. Same calculation. So let's just look at 2 examples, a currency and a stock example. This is the Euro USD. Let's say that you feel that the market is going to go back up. This is the wavy tunnel setup, by the way. And you feel that the market is going to go up into the wave. So your profit target is 122.30. Your entry price is 121.75. The difference is 55 pips. So using the three profit tiers and working backwards, the three profit targets are 55, 34, and 21 pips. Working from the 121.75 entry price, you add these profit targets to the entry price to get these three profit targets. You start out with your 21 pip stop loss, and you move your stop to break even when your first profit target is met of 21 pips. You move your stop to P1 when P2 is met, 34 pips, and then your third profit target is 55 pips. Here is Microsoft, a stock example. This is, let's say that you feel that the market is going to trade down into this area, into the wave. So you calculate where you enter, 240.85, and you calculate your profit target, 231.40. The difference is $9.45. Now, you can also, if some of you are trading options, you can also, this is a way for you to, if you're long the stock, you might want to buy, you could buy a short-term put just to take advantage of the market move as it moves down. And just know where you're going to get out of your option once the market moves down to this level. This is what you're trading. So it's a $9.45 price difference. Using the three profiteers, we start with $8.90, $5.50, $3.40. It's all Fibonacci based. I teach you this in detail in the course, even though I'm showing it to you right now, but we use it in the course. And then working from 240.85, which is the trade entry, you subtract these prices to get your profit targets. Your stop loss is $3.40. That's above your trade entry. And you move your stop to break even when P1 is met, stop to P1 when P2 is met, and this is what happens. You're taking your profit targets along the way. Okay? Using the three profit tiers. Very simple system. So we just learned 3 of the 10 habits of successful traders. And the simplest way to succeed in trading is to learn from the best and model their habits. Why should you practice these habits? Because learning them will help you save time and effort, make more money, and achieve your full potential as a trader. So now I'm going to show you how you can join my program if you want to learn how to trade the way I trade. But before I do, yes, I want to just give you a quote. And the day came when the risk it took to remain tight inside the bud was more painful than the risk it took to blossom. So it is my hope for all of you today that you blossom in your trading, that you become successful traders. So these are the 6 trades, the wavy tunnel trades that I told you about, 4 breakout trades. So these are the trend trades on the left and 2 end of trend trades. And if we look at the market cycle below, we have the 5 waves moving up and the 3 waves moving down. And the wavy tunnel trades can be broken down into the trend trades. So taking trades along the trend. These are all the breakout trades. And then the end of trend trades. And we show you, we have the exact trade plan for every single one of these trading strategies to follow. The good news is, once you, this is what David has to say, once you master the simple concepts of using the Wavy Tunnel Pro strategy, combined with the bungees and the semaphores, you can make more accurate, high probability trades each day, resulting in more profitable trades. This is the trading system that has worked for me over the past 30 years and counting, and it can work for you too. The Wavy Tunnel Pro, join me is a 5-day accelerated trading and mentorship program. Start now and join me for coaching April 11th, 2021. But as soon as you sign up, you will have access to all of the learning materials, and I would suggest getting started right away and then come back and do it again the week of April 11th and join me for coaching so that you really internalize what we're teaching you, the patterns that you're going to learn and integrate, whether you're a new trader or an advanced trader, experienced trader, it really doesn't matter. You are going to get something from you will all get a lot out of this program. The Wavy Tunnel Pro, I've been told, is a solid master's in trading education for all asset classes, instruments, and time frames. No special software is required. It works on all trading platforms. This is me. Join me in the 5-day accelerated trading and mentorship program starting April 11th. This is my flagship trading program and my own personal system to achieve consistent profits in any market. And the good news is you are grandfathered. Once you take this course, you can log into the website anytime next year, the year after. If you want a refresher, it's all there for you. It doesn't expire at the end of the year. This is my team. So this is a great team that you will get to know. And this is how we will do it in a 1-week program. Section 1 is on the Elliott Wave series. Yes, you need to learn a little bit about the theory. That's day 1. But guess what? You don't need to become a consummate Elliott Wave counter because the Wavy Tunnel Pro strategy counts the waves for you. The Wavy Tunnel Pro strategy, which you are going to learn in days 2 and 3, is the strategy which counts the waves without you having to count the waves. Section 3 is the Wavy Tunnel Pro desk with live trading, so that's on day 4. And section 4 is harmonic strategies, day 5. Wait until you see how all of this fits together. It's just amazing. And because it fits together so well, this is another reason why traders get confidence in the trading system, because the harmonic strategies and the Fibonacci, that's part of the Elliott Wave series, by the way, and the Elliott Waves, so the Elliott Waves, the Fibonacci, and the harmonics, when they come up with a level that is a level where you should take profits or get into a position, it gives a trader confidence to pull the trigger, to get in and to get out. You'll learn the exact trading system I've used to successfully trade in both institutional and retail markets over the past 3 decades. Yes, I started out as an institutional trader for JP Morgan on Wall Street for 14 years. And now I'm on my own. So there's more than 60 years of trading wisdom collected here. What is the price? Well, with $300 off today, the 1 pay special is $12.97, and the 3 pay is $4.97 a month for 3 months. The Wavy Tunnel Pro 5-day accelerated training and mastermind program. You will have unlimited access, and you just need to go to wavytunnelpro.com to sign up for this program. So what do you do next? Click the purchase button, choose your payment plan, get your login information, and gain instant access to the full Wavy Tunnel Pro course. You get started right away. 5 days, 30 training sessions, but all of those training sessions are there for you to begin right away. There's a lot in the website. Premium bonus is the live Q&A that I'm going to be holding with you and coaching sessions. That's a gold nugget. You will also have access to 15 videos, 15 live Q&A, and 11 student trade analysis sessions. So 11 student trade analysis videos where we go through the student trades. And you can actually see how the student trades use the Wavy Tunnel to take the trades and what we said about the trades, what happened to the trades. So each video is comprised of trade review and analysis, invaluable. So this is a way to internalize the concepts with numerous examples for practice to speed up your development. You will also gain access to the Wavy Tunnel Pro Desk and the Wave Count Desk, free for 1 month, where you will get the trade scanner on Forex, stocks, commodities, and crypto. You will have access to 4 London and New York trading and analysis rooms per week. You will have access to daily wave count videos on 20 different markets, and the Trade with Confidence videos and psychology podcast, as well as trade alerts with entry stops and profit targets, and the Discord membership channel and automated trading tool. Just a few good trades will pay for this entire program. But make no mistakes, you're going to be working with me, so we will figure out what your trading personality is and get you focused on which strategies you're going to use for your trading. We're going to hold your hands and mentor you to success in the trading room and Discord channel. We have a stock channel, we have an options expert, and Forex expert. So act now, and this is a recap. Sign up over the next 24 hours on wavytunnelpro.com. Sign up and you will receive my business plan for traders and investors. My business plan for traders and investors. Okay, so I'm just going to type this in, wavytunnelpro.com in the chat box, and the discount ends on Sunday. $12.97 is the best price ever. You are grandfathered into the price of this course, and the accelerated training starts on April 11th. If you have any questions, please contact me at jody@fxtradersedge.com, jody@fxtradersedge.com. Thank you so much for being here, and I'm really looking forward to being with you in wavytunnelpro.com and the accelerated training starting April 11th. Get started right away.
So happy to be here. Thanks for inviting me to speak today. We're going to talk about what I consider to be maybe the ultimate filter for swing trading. So if you're not familiar with swing trading, we'll talk about that. But very, very intriguing and very powerful tool you can use to try to find the best price swings when you trade the markets. So we don't have a lot of time with this, so I want to make sure we give ourselves enough time to get through the presentation and possibly get to questions here at the end. So save your questions if you don't mind, and I will work to get to those at the end of the presentation. Now, my background primarily is in the hedge fund space as a senior strategy developer for several award-winning hedge funds, so focusing on technical analysis and chart indicators and chart trading strategies. I've been a speaker at various events as well, including Bloomberg International events and some domestic as well as today's event. So let's go ahead and just touch on standard basic risk disclaimers. Trading involves a high level of risk and is therefore not suitable for all traders. Before deciding to trade, you should carefully consider your trading objectives, level of experience, and ability to tolerate risk. Also, a hypothetical disclaimer, hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. So understand both of those, common sense stuff, but important nevertheless to understand. Now, by the end of this presentation, you're going to understand how you could have identified these gold swings, and this is really a universal approach to identifying potential profit opportunities in the markets. But in particular, I'm going to show you the tools where you could have identified these in real time. And so this is based on a single contract and some pretty nice up and down swings in gold, but I'm going to show you a very powerful tool where you can actually identify this and know when this is happening in real time as a trading opportunity. So this is about using these tools to find what we'll call chart setups or predictive patterns that you can potentially trade to make profits. And I'm going to show you one example of how you can trade with a particular strategy using a drill down approach. So you'll know what that is, and that'll teach you how to know exactly where to buy and sell and place your risk stop when you are looking to trade one of these opportunities in the markets. Excuse me. So how much is it worth to know when prices are going higher or lower? That's really the fundamental question when we trade. It's, again, the essence of trading, predicting where prices are going for a market. Now, price chart patterns are a powerful tool to predict where markets are going. Some of the best predictive chart patterns are based on price cycles. So let's take a look at what we mean when we say that. This is what's called swing trading. So if we're interested in trading a price cycle in this example, what we want to do is start buying as close to a cycle low and then stop buying as close to the cycle peak. So that's our goal. The reality is we're never going to get the low and we're never going to sell right at the high, but we want to catch as much of the meat, if you will, in the middle of this trade opportunity of the swing as we can. Now, it's important to understand the concept of shelf life, and that's what I've highlighted here. When you're swing trading, the shelf life is defined with an upswing, in this case, as the duration that we expect this to take place. And this is where cycles are pretty powerful because there's a consistency a lot of times with the duration, how many price bars you expect this upswing to take place. The second aspect of duration is what we'll call magnitude. So it's how far do we expect the up move to go. And so if you happen, like for example, if you expect it to move a certain amount and it happens in the first price bar, then it's realized, the swing has realized this opportunity and you're done. So just understand that shelf life is a very important concept because what we don't want to do is keep on buying after the cycle starts turning down again, because now the odds are against us. So I'll put an X through this. We don't want to do that. We don't want to buy too early before the cycle lows in place on a previous downswing because the odds are against us. We'll likely lose money doing that. So what we want to do is, as much as possible, identify strong upswing trading opportunities and buy during those opportunities. Now we're looking at identifying and understanding the swing trading opportunity to the upside. Downside, same exact thing, except for opposite. Now we're looking to sell short as close to the cycle peak as possible and stop selling short as close to the cycle low. Again, we've got the same principle of shelf life, duration, number of price bars we expect the downswing to last, and duration is totally dependent on the time frame that you're looking at. So how long do you stay in a trade? Swing trade is one question here, and that is depending on the time frame, and that's going to be determined by the bar interval you use. So if it's a daily chart, you may find that the average downswing lasts for 5 to 8 price bars. So that's going to give you an estimate on duration. And then you can look back in time to see, some of the successful downswings, how far do they end up traveling? How far does price end up dropping in a successful downswing? And that is your magnitude. And if it does that right away, you're done. You've used up the opportunity. It's almost like a firework. You light off a fountain, it works, it showers sparks, and then it's done. It's used up. And the same thing happens with trading when you're swing trading. So how long you stay in the trade is going to be dependent on the time frame and also the trading strategy that you use, which I'll show you here in a second. Now, swings in prices are the opportunity or the pattern to trade. Traders can profit from upswings by placing buy orders, and this is an example of like an Amazon 120-minute chart. You can see the indicator down here at the bottom. Let me introduce this to you. This is what's called the basic cycle indicator, and this is designed to model price cycles that unfold in the market displayed at the top. So this is a 120-minute chart for Amazon, and if you dial this down, or we focus only on one upswing here, and that's where we have the green arrow, that's a clear upswing. We can again see the cycle unfolding. We see a cycle low. We see the upswing unfolding. This offers us from low to high on 100 shares about $6,500 worth of opportunity in this example. Now, we're not going to get all that, but our goal is to get as much of that as possible when we're trading. All right, so that's an example of upswing here. And then again, you can find these opportunities, by the way, on daily charts, on weekly charts, on 60-minute or 120-minute charts. Traders can also take swing trades and place sell short orders to potentially profit from down cycle swings. This is an example of one in Amazon on a 120-minute price chart. And basically, again, with 100 shares, this represents about $15,000 worth of potential. We're not going to get all that. We're not going to realize all that. But if we can get 50 to 70% of that downswing, then that ends up being pretty good. So again, we're using this is the top cycle indicator here in the lower first subplot right below the price chart. And the whole purpose of that indicator is to model cycles that unfold in the market. Sometimes markets don't really have definable cycles. During those periods, we don't want to trade. So it's only when you're starting to see well-defined cycles that we start to look for different swings or different up cycles and down cycles that we want to trade. So trading upswings and downswings in the market, no surprise here, is called swing trading. So here's some of the advantages of swing trading. Number one, it represents a good profit opportunity in a lot of time frames. So you can actually make some pretty good money when you swing trade on successful up and down swings. Number two, it occurs frequently in the markets. There's a lot of technical patterns out there like head and shoulders, triple tops and bottoms and things like that you may not find very frequently. So while the pattern may be valid, it appears once a year or very infrequently. You really can't make consistent profits from it. Second, and it happens all the time across all time frames. So you could be a longer term swing trader that trades like a weekly price swing or daily price swings that could last like 5 to 10 days, for example, or you can even be a swing trader that focuses on intraday price swings as well. So it's a great setup, one of my favorite patterns or setups to trade in the market. So let's take a look at some questions. What is the best tool to track price swings, number one? And then how do I know which swings to trade? Now, these are the harder questions, but I'm going to show you a really cool tool to answer these questions. So what is the best tool to track price swings will be the first question here that we're going to try to tackle. Now, cycle indicators are designed to depict or detect price swings in a market. These cycles, upswings and downswings, often represent excellent swing trading opportunities, but what is the best way to create a cycle indicator? So let's talk about that. This is our own in-house cycle indicator. If you saw the code, it's really incredibly simple, but what I like about this indicator is that it allows me to change the parameters and change the focus. So I can focus on shorter term cycles, medium term cycles, or longer term price cycles in the markets. So in this case, again, we can see some fairly well-defined cycles on the Netflix 120-minute chart. Now, what if there's a way we can start incorporating Fibonacci math into the settings in the cycle indicator? This is starting to get interesting, and let's talk about what that is and why that could be interesting for us to do. Is it possible that Fibonacci math may help us build or tune or set a great cycle indicator? Can Fibonacci cycle indicator uncover market cycles using what's called the golden ratio? So if you're not familiar with Fibonacci math, we won't dive into this. It's not really hard to understand, but basically we can use Fibonacci-based cycles that uses these parameters from the Fibonacci sequence. What is that? It really is these numbers right here. So 1 and 2 could be a pair, and this is what you could program into your cycle. Or you can do 2 and 3, and you'll notice that 2 plus 3 equals 5. You can use 3 and 5, or 5 and 8. Now, what's important here is that as we use larger numbers, our focus is on longer term cycles. So the interesting thing about this is actually called the golden ratio, and that is the larger number divided by the smaller number. So like 34 divided by 21, or 89 divided by 55. So these are settings, consecutive numbers we can use from the Fibonacci sequence that we can use for settings in a cycle. What is the golden ratio? It's a number ratio that's approximately equal to 1.618. Why do we care about that? Well, it's interesting because you end up seeing this nature a lot this ratio a lot in nature. So if we were walking along the sandy beach, for example, you can come across a shell, and what you find is that a lot of shells increase the spirals at that rate, at that 1.618. You can also see insect population growth and certain other growth in nature that expands at that rate. So it's a really interesting mathematical relationship that we tend to find in nature. So what's interesting is how that could apply to a potential trading and how we find price cycles. Now, we discovered that using these parameters based on Fibonacci math, the Fibonacci golden ratio was highly effective at revealing or finding market cycles. So here's an example of an Amazon chart using the 5-8 setting. So here at the top, 5-8, 2 consecutive Fibonacci numbers with the golden ratio. And we can tap into some fairly well-defined cycles in the market. Sometimes you get a little bit of noise, but you can see near the right-hand side of my chart, the cycles are incredibly well-defined. So it does end up being pretty effective. And you may want to try different settings from the Fibonacci sequence. This is a Google 60-minute chart using the 813 Fibonacci golden ratio setting. So again, cycle is fairly discernible here. Here's a gold ETF 120-minute chart. Fairly discernible price cycles here as well. Sometimes you get a little bit of noise. This is U.S. Treasury bond futures, 5/8 settings. Again, you get some pretty nice cycles in general. Now, I'm not going to really dive into this too much because we're limited on time, but one of the powerful things about the cycle indicator is the nuances. So, for example, in a perfect situation where buyers and sellers are equally balanced, you'll see cycles really travel equally above and below the zero axis, just like I'm drawing here with the magenta line. So if you have equal buyers and sellers, that's what you end up seeing. Now, what's interesting is you start to detect some, we'll call it anomalies with buying and selling. And when you see the cycle low, for example, right at zero after a positive cycle peak, this is telling us that the sellers are fairly weak. And so this can be used to identify a follow-on upswing. And in this case, you can see a fairly strong follow-on upswing. Same over here. You now have the cycle low that's unfolding above the zero axis. And this oftentimes projects a very strong upswing. So these subtle nuances of noticing what a cycle indicator does can be a great way to read what opportunities there are in the markets. Using the Fibonacci golden ratio, we created an effective indicator to uncover cycles in the markets. Our Fibonacci cycle indicator is an excellent tool to track cycle swings. So this is the cycle aspect of it. Now the harder question is, how do I know which swings to focus on? Right, so we have the Fibonacci independent cycles as our first indicator. We can use the sequence to set it either longer-term focused or medium-term or short-term focused. But which cycles should we as traders be looking at potentially to trade? We can see that swing trades offer excellent profit opportunities, but how do we know which swings to trade? That's a harder question here now, but there's a really exciting answer to this. Our research uncovered an answer to this question, but before we go there, it's important to understand that cycles occur across all time frames. You can have tradable price cycles on a 60-minute chart. For example, here's QQQ. Really beautiful cycles here, very, very easily readable, if you will, and this creates a lot of very nice swing trading opportunities. You can also have tradable price cycles on a 120-minute chart. So this is an example of Amazon 120-minute chart here, and fairly readable price cycles here as well. You can also have tradable price cycles on daily, weekly, and monthly charts as well, and these can be incredibly powerful, as predictors, if you will, of where the next cycle swing or the next move is likely to unfold in a market. If you haven't spent time looking at weekly and monthly charts, I highly recommend you do it. Some of the best trading opportunities I've seen over the last year are found in weekly cycles and monthly cycles as well. Even if you're a shorter term trader, it gives you a very strong bias that you can use potentially to drill down to find more exact entry and exit opportunities, but showing you really where the strong move is likely to unfold, again, using longer term cycles are very good for that. So again, this is the U.S. daily, U.S. being the 30-year bond futures. You can see some fairly legible cycles. Now we know that single cycle swings can be profitable, but what if there was a way, starting to be creative here, to track and trade short-term, medium-term, and long-term cycles all moving in the same direction? Now, can we get an additional advantage by doing that? Or what they call in trading lingo, an additional or powerful edge, or if we decide to do this. Is this even possible? So here's where we line up the same cycle indicator, but with different settings, and we're focusing on a shorter term cycle at the very top, and that's my tradable cycle, by the way. That's the one I want to use to govern the start of the upcycle and the end of the upcycle to determine the window of time where I want to actually place trades. And then the medium, the middle one here, is actually a intermediate term cycle, and the bottom one here is a very longer term cycle, if you will. So what if we find trades where all three cycles are going in the same direction? And you can see here, this is an example in gold, and a single contract in gold futures has $5,000 of profit potential. Now what's interesting here is how this move is really powerful. Almost every single daily close is higher with that upswing. And this is, again, my tradable cycles, my top cycle up there. And so I don't want to continue buying after my cycle peaks out. But this is a very nice profit opportunity, and I would argue because we now have 3 different cycle time frames all moving in the same direction, that this could be a higher probability chart pattern that we can look to trade. So what if we tracked Fibonacci cycles across multiple time frames? We could wait until a number of cycles are all moving in the same direction, and this could dramatically increase the odds potentially of finding winning trades. Here's a down cycle example in gold as well. So you can see the tradable cycle at the top, a little bit of noise here at the peak here, but this down cycle and the tradable cycle, the center medium term is also down, and the longer term cycle are also moving down. So this is a great example of a downswing that offers strong profit potential, $4,000 a contract. And you can see here that this is really, it's almost straight down. I mean, almost every single close is lower with a few exceptions, but it's a very nice price move there. And I would argue, because we have multiple time frame cycles all moving in the down direction, that this ends up being a higher probability trading opportunity. So now for the challenge. Let's talk about a new tool that we can potentially use to help us find the best swing trading opportunities. What if there's a way to create a single cycle indicator, cycle-based, based on Fibonacci math to show the direction of price swings across multiple time frames? It would almost be like composite swing trading. So we want to see when the most cycles are all going up or all going down, could this be a big advantage? So trading swings that happen at the same time across multiple time frames. This could dramatically increase the odds of profitable trades. Now, creating an indicator that tracked multiple short-term, medium-term, and long-term Fibonacci cycles, that's what we want to do. So I decided to call this new indicator the Fibonacci Cycle Composite. So let's take a look at what this could look like. Again, the Fibonacci Cycle Composite, the way I created it, tracks cycles across 5 independent time frames. So here's what it looks like on a chart. And you'll see the top cycle, don't forget, is always my tradable cycle. That's defining the cycle peak, the up cycle or the down cycle, and the cycle low or the cycle low, upswing, and the cycle peak. This is defining my shelf life, my duration when I'm trading, or when I'm in my trade, if you will, targeting to either buy or sell a particular market. The second one down here, I'll circle this, second magenta color here, that's a short / medium term cycle. The center green cycle here is a medium term cycle. Then we have a medium long hybrid here, the second from the bottom. The bottom cycle is my long term cycle. Now, this gives me cycle information across 5 different time frames. Now, here's what's interesting. We took all 5 of these cycles and added those together equally weighted to create this indicator you see at the bottom. It's highlighted to give us this. This is now what we call the Fibonacci Cycle Composite. This is where it gets really interesting. So let's go ahead and take a closer look at that bottom indicator that, again, is comprising all 5 of those price cycles added together. So what's interesting here is that when this indicator, again, I'll get to questions here in just a bit, guys. When this indicator is red, it's bearish. So this is telling me that the bulk of the price cycles, these 5 price cycles, are in general, the vast majority of these are bearish and swinging lower. So when I find like a cycle peak, and you can see some cycle details in here a little bit, when I see that cycle peak that's underwater, that's negative in red, that could be turning me on, or identifying me to me a potential profitable downswing here, right? Next one over here, a cycle peak, downswing, very strong probability downswing. Here's another one, cycle peak, you get another downswing here. And the same thing over here for the middle. It starts turning green, and then when you start finding the cycle low, the details here that are positive in green, this could identify some potential very strong upswings. So this is telling me, again, adding all 5 cycles up together to shed light on what are the majority of the price cycles doing in time frames, and we can use this to find what we'll call higher probability trading opportunities in the markets. And then it turns red again, then we want to focus again on the downswings. So let's combine this here in a second with the cycle indicator. I'll show you how powerful this can be. But when the majority of the Fib cycles are swinging higher, then we look to buy. So this is answering the question, what price swings should I focus on? If you're just purely looking at this Fibonacci cycle composite indicator, that's turning green. That's answering that question that we had to focus on the upswings. When it's red, the majority of the Fibonacci cycles are swinging lower across all time frames. Then we look to short. So you can see the negative bearish red values here in both areas, and sure enough, prices are falling. So it gives us a pretty good reading. We'll look at some live charts here in a minute and what's happening right now in the markets. You'll see how powerful this is. This is a powerful swing trading filter to show the composite swing trades for any market and time frame. I promise I'll get to questions here too, guys, in just a minute. Now, trading the same direction as the Fibonacci cycle composite creates a potential advantage, powerful advantage for traders. So here's the rules we want to follow. The bullish swings, these are setups now. The bullish swings that we want to trade, the bullish cycle upswings, are defined as follows. Number one, look for an upswing in our cycle indicator. Number two, we want the Fibonacci cycle composite indicator to be green and positive. So what does this look like? Right here, you can see very clear. I mean, I think we can all see this. I'll change my ink color here so we can contrast that. But this is a cycle low. I think we can all see that fairly easily. This is a little bit of part art, part science when you're swing trading to find the lows and highs, right? But that's clearly a cycle low. And at that same time, we can see a very positive green Fibonacci cycle composite value. Are we tempted to short here, to sell the downswings? No, because this whole time frame, the first half of my chart, the Fibonacci cycle composite is green and positive. So now we're focusing on these upswings in gold. So that's a great trading opportunity to trade these upswings. This is answering the question, what direction should I trade the swings in? Now the opposite holds true for bearish Fibonacci swings. Look for the cycle downswing, number one, and the Fibonacci cycle composite value is red. So this is, again, looking for the cycle downswing. We can see here's a cycle peak. How do we know we want to trade that downswing right there? Well, very simply, the Fibonacci cycle now is red and negative. This is telling us the majority of time cycles, short-term, medium, and long-term, all 5 cycles that we're tracking are tracking lower. They're swinging lower. So this is, again, composite swing trading, indicator down here at the bottom, and now we're focusing on the downswing for our tradable cycle. Are we tempted to buy here? This is obviously a cycle low down here. Do we want to buy that? No, because our Fibonacci indicator down here is red. And sure enough, we don't see a lot. I mean, there's not much of a bounce here. You have to look behind the arrow here. But the trading opportunity, the best one here, is really in the downswing because we see the majority of the cycles swinging lower and bearish. So I told you earlier in the presentation that you would know, you'd be able to know when to trade or how to identify these swings on the gold chart. This is a daily chart of gold in real time using indicators. And so now you can. So using the cycle indicator at the top, you're modeling price cycles. So this is the modeling price cycles helping us understand when the trade opportunity starts and when it ends. The second indicator down here at the bottom, the Fibonacci cycle, is telling us what side of the market that we may want to consider trading. And so you can see here the green upswings are happening when the Fibonacci cycle composite is green and positive. So let me erase my ink here. So green and positive, first swing, green and positive, cycle low, second swing. You see that? Third swing. They're all green and positive because we have so many cycles across different time frames, all pretty much bullish. The reverse side of this is we're now thinking bearish. Now, if you haven't sold short, it's a concept of making money when prices fall. You can also buy put options. You want to learn how to do that because it's almost like if you're not selling short, some people think there's something wrong with that. There's not. That's what traders do. We speculate on price movement. It's almost like fishing in half a lake, right? You would never do that. You want to fish in the whole lake and find the best opportunities, and sometimes they're on the downside for a market. So here we know to focus on the downside swings because the cycle peaks are unfolding when the Fibonacci cycle composite is red and negative. So a very, very powerful tool from that standpoint. Now the Fibonacci cycle composite could be the ultimate swing trading filter. Fibonacci composite swing trading examples. Now I've shown you examples of basically when you can, or how to find the opportunities, how we're finding the best swing trading opportunities. That's all we've done so far. We haven't looked at any example that's shown us when we actually enter a trade or when we exit a trade. So let's take a look at that. So let's say we want a trading strategy added on top of the mix here, if you will. So here's the rules for the trading strategy. One, we want to identify, using the rules I just covered, identify a cycle downswing setup, right, or pattern. We're using both the cycle indicator and the Fibonacci cycle composite to do this. Number two, we want to drill down and trade the swing in the direction that we're forecasting. So for a downswing, we're expecting prices to fall. And now we're going to talk about how do we trade it? How do we know where to enter our trade and exit our trade and put our risk stop? And I'll show you a really cool rule you can use using a very conventional trading strategy. So in this case, we're trading in downswings. Let's take a look at this. So you can see here in this example, this is a gold example. Are we tempted to buy it all here? No, we're not, because the Fibonacci cycle composite is almost red the entire time. So that's telling us to focus on the down cycles. And so now we're looking to profit from falling prices. When the cycle peak starts, we're looking to start selling the downswings here. Again, remember the concept of shelf life. So this is a daily chart of gold. That's our time frame for our chart opportunity or chart setup. And now to trade this, here's a neat trick. You go to a shorter time frame, like a 30-minute chart here, and that's what drives your trading signals. You have more data, and because you have more data, it gives you a better ability to both increase your profit potential and decrease your risk. So we're changing our time frame that we're trading this opportunity on, but I kept a highlight here so you can see the basic downswing that's unfolding on the daily chart. Now, if you're not familiar with this is a really cool and easy way to trade. This is what's called like a Donchian breakout strategy, and the rules are incredibly simple. So what you do is when prices fall below the lower blue line right here, you short or you buy a put option. So very easy to do in futures. As soon as that happens, you're putting your buy stop above the upper blue line, right? So in this particular case, the upper blue line falls and you're moving your buy stop down with it. It becomes like a trailing stop. And then eventually you keep on moving your stop down. When prices eventually break above the blue line, that's kicking you out of your trade. And in this case, you're making about $2,700 on a single trade. Now, this is a powerful way to trade the markets because we now have what I consider to be a powerful way to find the trading opportunities with the Fibonacci cycle composite. And then you also have a methodology, if you will, to know where to get in. You would use a trade signal, if you will. So this can be a very powerful way to trade the price swings in one example of a fairly conventional breakout strategy applied to a drill down. We say drill down because the 30-minute chart is shorter term than the daily chart where we found the opportunity to swing. And this gives us an opportunity to enter our trade, know where to get in, know where to place our exit stop, and know where to get out. You can use options too. You don't have to sell short gold. You can buy a put option if you wanted to. Here's a second example. Are we tempted to buy it all? No, we're only looking to sell here. Why? Because the Fibonacci cycle composite on the very bottom is red and negative. So now we're turning to our cycle indicator, interested in starting to sell short or buy our put options when the cycle peak happens, understand the duration we expect, and then drill down again to the 30-minute price chart you see here. Apply the same Donchian breakout strategy, and you can see here in this particular example, we're selling when prices fall below the lower blue line. We are buying back when it goes above the upper line. Very simple. This trade makes $1,870 in this example. So here's finding a lot of different swing trading opportunities using the 1-2 punch of the cycle indicator and the Fibonacci cycle here. So here's about 5 different examples. The first one, how do we know to trade the upswing? Simple. We have a cycle low and we have green Fibonacci cycle composite telling us that we should focus on the upswings. What about the downswing? How do we know to focus on that? Simple. Fibonacci cycle composites, red and negative. Now we're focusing on that. And by the way, if it's red and negative, the Fibonacci cycle composite comes back up to 0, those can still be pretty good setups on the downside or the upside for that matter. If it's positive, comes back down to 0, that can still be a good setup. Here's another red negative Fibonacci with a nice well-defined price cycle peak here on the cycle indicator, and that downswing is a good trading opportunity on the 120-minute chart. And then finally, we're back to trading the upswing at the end. So we're being selective, but we now know what side of the market to really focus on. Bank of America, here's an example again of a 120-minute chart. We know to trade. You can trade across all time frames. It doesn't have to be, daily necessarily. You can focus on weekly cycles or monthly cycles. Now, I'm going to get to questions here in just a second, but let me answer this first question For those of you, I'll go to live charts here, by the way, in just a second to get live questions. But for those of you asking, who are traders, Mark, how can I access the Fibonacci cycle composite? Basically, my background is hedge fund manager, so I'm always researching new and powerful charting tools that you can use to potentially put the odds in your favor. So this is a swing trading approach that is pretty powerful. One of my all-time favorite ways to swing trade. Tradable swing trades happen all the time across multiple time frames. Swing trades are great strategies or setups for stocks, options, futures, and Forex markets. The Fibonacci cycle composite shows us when the number of cycles align. The Fibonacci cycle composite helps identify the best swings to trade. So here, this is the indicator. Now, what's cool about this indicator is it's incredibly simple settings. All you're really doing is picking the colors. So it doesn't get any easier than that. You don't have to fool with complex settings. We've already done all that in the background. All you're really doing is determine, do I want red to represent bearish cycles? Do I want green, for example, to represent bullish cycles? So the Fibonacci cycle composite indicator also is good for stocks, options, futures, Forex, crypto, you name it. It's a universal way to trade markets. Swings happen across all markets and across all time frames. So we had our developer create these indicators, the Fibonacci cycle composite, the cycle indicator, for the following platforms: TradeStation, Thinkorswim, TD Ameritrade Ninja 7 and 8, both versions, eSignal, and Infinity IAT. So for those of you interested for your trading and saying, how do I access these indicators? These are the platforms we built them for. This is a multi-platform license too. We're not charging you any additional fee for multiple platforms. We just ask that you respect the honor code and only use it for your trading. And we give you this additional benefit of being able to do that. Now, I also created an on-demand workshop here, and I cover the following things: finding high profit swing trades in stocks, options, futures, and Forex. For those of you interested, this is really preparing you for how to find those best trading opportunities. Selecting Fibonacci timeframes for cycles, my top bullish composite swing trading setups, my top bearish composite swing trading setups, how to enter and exit trades, how to trade options with high profit composite swing trades, futures and Forex examples as well, and learn to target composite or high profit swing trading opportunities. So here's the promo that we have for today. It's a special deal we're offering. Ordinarily, the Fibonacci cycle composite indicator is $497. Now we're also throwing in and including the top cycle indicator as well. You can see that here shown. The blue indicator over here on the left-hand side, that's a cycle indicator, and we're giving you an even more powerful version of that here, and I'll show you that here in a second. So you get that in the bundle. We also include the breakout indicator that I showed you that shows you where to get in trades, drill down charts, and you can use that for your signals. So you get two indicators at the top to find the opportunities on your setup time frame, and then you have the breakout indicator also included. And I'm also including the workshop, which is about a 2-hour workshop, and it goes over again all the topics that I just showed you. Now, ordinarily, this all goes for $1,188. We've slashed it down to $497. You save almost 60%. So let me just copy this in, guys, for those of you interested. I'm going to copy the link here for this. Give me 2 seconds. Just for those of you interested, you want to go to www.toptradetools.com/yes. So go ahead and let me just put this in. Give me a second here. So copying this in for everybody, www.toptradetools.com/yes. All right, so let's go ahead and hit some questions here. Thanks for your patience, guys. I appreciate that. Give me a second here. Let me copy this in here. Yeah, live charts, do it right now. So I'll copy this in here again, www.toptradetools.com/yes. And now let's go to live charts and check it out. So what's happening right now in the markets? What markets do you guys want to see? So just call market out, call stock, futures, Forex. What do you guys want to see? And I'll move this above here so you can see the live chart here, and also you can see the link here. And by the way, we also developed this for well charts. So I don't know if I had that on there. Well charts as well, new platform that's come online. That's on the browser you can access. So pretty cool stuff with well charts. So this is available on well charts as well. SPX, I don't think I have that. I have SPY. I don't think on this particular charting or this this account. I don't think I've got that turned on. All right, so let's take a look at maybe like the daily. All right, so daily right now would be bullish. So this is let's just zoom in a little bit here. We're coming down to a cycle low, and we have a positive green Fibonacci cycle composite value. So if we look back in time, we can see how this has played out. So this has been a swing trade that you could have traded right here. You're only focusing on buying here because the Fibonacci cycle composite has been strong green and positive. So all of these swings over the past couple of weeks, these are all in the up direction. This is where you would have been focusing your trading opportunities, right? And so now we got into a little bit of let's see, this was a little bit chop sideways, even though, yeah, so this would have been a little harder to trade in here, but certainly, right, this last one was negative. So you would not have traded that, but now you've got a cycle low that's likely coming into place here and a positive Fibonacci cycle composite value. So on a daily time frame, that's what you would have been looking at. Let's look at like intraday. Now, shorter term here, kind of a mixed bag here. It's oscillating between positive and negative, but let's go back in time here a little bit. It would have had you on the long side really since about the 5th of March. And then before that, I think you had a little bit of a sell-off there, a brief sell-off. But like, for example, here's a good example of a cycle peak that unfolds with a very negative Fibonacci cycle composite. So right there. And then here's an example of a cycle low with green, positive green. And that had a little bit. Sometimes they don't develop fully. That kind of fizzles out a little bit. And then you have some really nice selling opportunities. You've got your cycle peak with a red negative Fibonacci cycle composite, another peak, beautiful down shorting opportunities or put buying opportunities there as well. Crypto, I don't see. I'm trying to think of trader. What is the? Do you know the future symbol? I think I've got access to that here, but this is not. I don't have crypto turned on for this in particular. Nasdaq. Let's take a look. NQ. Same deal here. So that's been pending data. So that's still pulling that up. Just a second here. So you can pull up like a Nasdaq 60-minute. I don't know why that would take long here. Yeah, it's bogging down here for a second. Let me hit some questions while it happens. Yeah, it's weird. I don't know why. Let's look at daily. Why it's taking a long time. So daily comes right up. But let's turn back on the fib. I don't know how that got shut off. Give me a second here. So I'm going to turn back on the Fibonacci cycle composite there at the bottom. Sometimes if you don't have the data on your screen, it won't load properly because the fib is again tracking multiple time frames. So this is a beautiful downside setup here. So this just happened where your cycle peak is right there. You're underwater, negative. So now you're focusing on the negative, and the Nasdaq got crushed. So that's pretty good. Right now, I think it's more neutral, but you could have looked for a shorting opportunity right there. I don't know how high quality it is because you're pretty close to zero there. So it's really a judgment call. Lots of buying opportunities before that. This is all green. So you're focusing on the upswings there, if that makes sense. Does negative divergence apply? You know what? I don't think it's a really good divergence indicator. I don't recommend using it for that, honestly. So I wouldn't recommend that. Let's see, another question here. See, demonstration in live today. Okay, stock gotcha there, I think. How do I get the Cycle Plus? So here's the Cycle Plus that comes with it. So Cycle Plus is actually bundled in here. So that, and the cool thing about Cycle Plus you'll notice is look at the dots in the middle. See how the dots are green right here in the middle? That corresponds to a positive green Fibonacci value. See how the dots are red over here on the right-hand side? That corresponds to a red Fib value. So it almost builds in some Fibonacci cycle composite information, if you will, inside of your cycle indicator. So that's pretty cool the way that does it. That is included. So this bundle here you guys are looking at, you get the following indicators. You get the Fibonacci cycle composite, again, multi-platform license. You get the top cycle plus indicator, you get the breakout indicator, and you also have the on-demand swing trading workshop. And again, this is all included, guys, on the link. You've got to go to the link, www.toptradetools.com/yes. Give us a call if you have any questions, 859-963-3445. We're happy to help. So I wouldn't use negative divergence or the Donchian indicator. That is included in the package. You get, and that's the breakout. So that's the breakout indicator right here. I don't have that shown on my chart, but that is included. And then the 2-hour workshop on demand, it's already been recorded. You guys get immediate access to that. Gold and silver. Let me see if I just have a few minutes to pull that up here. Give me a second here. So let's look at like gold futures at GC. So this is the daily. Is there any doubt, guys? Beautiful down. Look at all these down cycle swings, right? For gold, we're focused on the down swings here because of the fib. It's been red negative here on the daily time frame. So over here, you would have been focused on the bullish upswing right there. Reason why? Fibonacci was positive and green when that happened. And again, you can look at multiple time frames, like 60 minutes. Sometimes you see some pretty nice trading opportunities in gold as well. So what's happening right now? Right now could be we get a cycle peak in here in the 60, you might get a bearish setup right there, because if a cycle peak comes in with a red and negative Fibonacci value, that could be a nice bearish setup here for gold. So watch for that. And then also play around with your settings. This cycle, I'm using 5/8 as the two Fibonacci sequence numbers. You could use a different, setting like 8/13 or 3/5. And sometimes different time frames or different settings work better. Let's see. Are there? Okay. Okay. Are you having other interesting? Yeah. So we do it. TopTradeTools.com. We got a ton of great stuff. So it's really stuff. These are many of my favorite indicators I've developed as a hedge fund manager over the years. That I love trading. I've always loved it myself. So obviously. Interested traders who are technical chart-based traders, you're welcome, guys, to come out and check out and see what we got at Top Trade Tools. All right, if I missed your question, guys, I do apologize. You can send your question in to support@toptradetools.com. We are happy to answer those, and I want to be respectful of your time. So thank you very much for giving me the opportunity to present today. And thank you, everybody, for listening out and hearing me out on the interesting Fibonacci cycle composite swing trading filter.